Hey, can y'all hear us? Are we live? We just had some audio gremlins, but I think we got it figured out. Did we get it figured out? Can everyone hear us? Aaron, can you hear me? I'm sitting next to you.
I can hear you, Spencer. I hope Chris can hear us.
Chris, can you hear us?
I can hear you guys. It's working good now.
More importantly, Zinger Nation out there, I hope y'all can hear us. Happy Monday, everybody. You know, the markets are back open. Pretty red day all around, so I'm curious how everyone's been playing the market today. We'll do a quick check-in on crypto as well, but we've got our man, Chris Katje, here with us today. We're going to be talking about some SPACs, and then Rush Street Interactive will be joining us in about 5 minutes at 11:45 Eastern.
Should I roll the intro?
Yeah, roll the intro.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujastyk from TrendSpider. We have a breaking news. All right, we're going to start the show off with some SPACs. Wait, hold on 1 second. Aaron, what are you saying? Yeah, we know we're on camera. Yeah, okay. We're all good, man. We know we're live. Do you know we're live? We know we're live. Chris Katje's here. Holy moly. Chris, what's going on today?
Hey, Merger Monday, Spencer. That's what's going on.
Oh, man.
I didn't fact check this, but this is coming from Julian Klimachko, a well-known expert for SPACs and also M&A. He said that today is actually the record for the most deals announced in terms of M&A ever. So we not only got some big M&A deals, but also 4 SPAC deals announced this morning to go with last week's busy week, right? We had 11 deals announced last week, 1 merger called off, and we do have 7 votes this week, 2 in the shortened holiday week. So a lot of things going on out there. So before our interview today, let's get into today's deals. I'll try to get through these quickly. I know we've got a busy show today. So up first, we have FTHX. This is a merger with Mondi, which is a technology-first travel marketplace, a portfolio of globally recognized brands. This is a $1 billion value deal. They had compounded annual net revenue growth of 41% from 2015 to 2019. Said that they have that proven business model, historical profitability. That's something we always love to see. 5% of the private airfare market in North America in terms of market share, and a distribution network of 50,000 leisure travel agents. So their programs are Trip Pro, Rocket Trip, and Trip Planet. So doing, a couple different travel sector areas specifically focused on the North American private airfare market. Spencer AB, this follows several deals that we've gotten in the SPAC space for travel industry. Yeah. Of course, post-pandemic, we'd like to think that we are fully there. But, these travel deals possibly happening, at a unfortunate time that's, going on with the travel industry now.
Yeah, the timing really is interesting because it's either really good or really bad, depending on your point of view, probably.
Definitely.
Yeah.
And then deal number 2 today, we have LNFA merging with ZeroFox. This is a cybersecurity software as a service enterprise valued at $1.4 billion. As part of the transaction, ZeroFox also acquiring IDX, which is a leading digital privacy protection and data breach response service company. Customers in over 50 countries, including some blue chip names. They have proven capabilities to mitigate cyber threats across multiple industries, public and private sectors. So they serve over 2,000 customers, including 5 of the Fortune top 10 and the largest companies in media, technology, retail, and energy. And 90% of their revenue will be recurring platform subscriptions. So
you'll love to see that. You'll love the recurring revenue.
Cybersecurity and software as a service. I mean, this one definitely caught my eye. And Spencer, you said it. We love the recurring revenue model. What do you guys think? Cybersecurity seemed to be a hot sector in 2021. You think that growth continues going forward?
Most likely. Wait, can you repeat again who their client base is?
I don't have that in front of me.
Okay.
I didn't dig into the presentation, but it said 5 of the top 10 Fortune 10 companies. So when you think the largest companies in the world, they work with some of them.
Got it. All right. Yeah. I mean, cybersecurity. I own the CIBR ETF. I've got cybersecurity. I think everyone should probably have some cybersecurity in their portfolio, whether it's this or another one. So yeah, I'm long-term bullish the space, but I don't know anything about the company besides what Chris just said. So
definitely. And then deal number 3, we have DYNS merging with Senti Biosciences, a gene circuit company. So engineered cell and gene therapies, $601 million equity value. The thing that obviously stands out on this is that they're getting investments from ARK Investment, ARK Funds, Morgan Stanley, Amgen Ventures, and T. Rowe Price. So some bigger names involved in the pipe and some additional financing. This is a pre-revenue company. They expect to file some IND filings for their lead product candidates in 2023. So we're a couple of years away from really getting into this company, but obviously it sounds like ARK Funds is going to carry some shares, I would guess, in ARK-G once this deal is done.
And then let's just do we have one more. Let's do it real quick.
One more. Last deal announced this morning, we have GLAQ merging with Forefic. This is an African agribusiness company valued at $300 million. It will be the first Moroccan-based company to list on a U.S. exchange. 250,000 tons of storage capacity, 7 production units, and 2,200 tons per day of crushing capacity. Distribution across 45 countries. That's the key for me, right? We all know that, the population is growing in Africa. They need more food. And here's a company working with 45 countries in the region and can hopefully, make things better for the population there. I didn't know this company prior to today's deal, but as I said, the first Moroccan company that will ever be listed on a U.S. exchange.
Damn. All right. Now, got to add that to the list of companies. I'm sure this will be added to the Africa, or there are several Africa ETFs that track the African market. So I'm always interested in like super emerging market companies. Like Africa is, or Morocco, like super emerging market. So I'm gonna have to keep an eye on this one. Okay, I see our guest here, Richard. I think we're gonna just roll with it if that's cool with you. I see Richard here. I see Nicolo here. Chris, why don't you give us a primer? Who are we bringing on right now?
Yeah, guys, I'm super excited. This is a company I've been following for a long time. We are joined today by Richard Schwartz, the president, CEO, and co-founder of Rush Street Interactive. That's ticker RSI, and Nicolo Damasi, the CEO of DMY Technology Group, which took Rush Street public via Spac merger, and he is also a member of the Rush Street Board of Directors. Richard, Nicolo, welcome to Benzinga Live.
Great to be here as always.
I can't hear.
Richard, can you hear us? Oh no!
Uh-oh.
Okay. Richard, I can hear you fine.
We can hear you.
All right, this is what we'll do. We got our producers in the background. Producers, can you please send to Richard a Tesla link?
Can you hear me?
There
Yes.
we go.
Yes, can you hear us?
We're good. We're great.
Yes,
Awesome.
yes. Good to go.
I didn't know,
It's
Richard,
Monday.
that you're Richard's a concert pianist, it looks like. I didn't even know that about you, Richard.
Love the background. Love the background.
Hidden skills.
Is that a real or a virtual background?
It's real.
Okay, just check it. I had to check.
Awesome. Well, I'm so excited to have you both on. Nicolo, of course, we've had you on several Benzinga programs before. Always a pleasure to talk to you. Rush Street Interactive, well-known sports betting and iGaming company. So, Richard, let's start with you. You guys recently reported your quarterly earnings. What were the biggest takeaways in that quarterly earnings report that investors should be paying attention to?
Thank you. Well, good morning, everybody. First of all, I think it's just the story we have is really compelling since we went public last December. We've had a beat and raise every quarter, and in Q3 it was a tremendous a beat in terms of growth on the revenue side, but also we lost a lot less than the market expected. We've also had sequential growth quarter after quarter after quarter throughout the year, which is in contrast to some other public companies in our space that really had struggled a little bit more during the slower Q2, Q3 calendars, with the sports events being a little smaller in terms of volume. So I think our consistency and our growth and the excitement of where this business is going as new markets open up for us in the new year is really why we're so excited about the company.
Perfect. And Nicolo, same question to you. You know, quarterly earnings, you, of course, is something you've gone through with several companies before. What were the big highlights from that quarterly earnings report for you?
Well, look, I have a soft spot for Richard and RSI. It's my first IPO, obviously, and it's a business that is closest to what I used to run when I was operating public companies, Glue Mobile. So, Richard is, I think, frankly, the most talented, I'd say leader in the space when you think about the product and engineering stack that he's built. What attracted me to the business, originally was the fact that they're effectively operating a company much like a social casino, free-to-play gaming business, but they're doing it in the regulated space, and they're getting into markets faster than anybody and, frankly, everybody. It really is remarkable. What strikes me every single earnings call is their payback periods. Every single quarter, they've got the fastest payback period on marketing spend, and that's been consistent since we announced the pipe through to the close, we're coming up on the 1-year anniversary here of RSI as a public company, and Richard just has an amazing ability to know exactly how to drive the company's product engineering stack, to update his games faster than anybody else, get those returns, get that operating leverage, and get into new markets faster than anybody else. And I think he's a one of a kind, frankly, on all those metrics.
Well, thank you for those kind words, but I have to just let you know, our team is extraordinarily talented, and we have a really incredible leadership team, all with 10 plus years of experience in the gaming industry. You couldn't find the talent that we have really anywhere in the U.S. market because online gaming hasn't been legal that long. So we have a very seasoned, experienced, tremendous development organization that really drives a lot of the records and pace and quality and innovation that we do in our engineering side. So I want to make sure they get the credit they deserve.
Perfect. Richard, thanks for that. We heard Nicolo mention tech stack a couple times. I'm familiar with that term. I've covered the sports betting and iGaming industry. I've bet on some sports myself. But for viewers out there who aren't familiar with tech stack, what exactly is that, and how does that make Rush Street maybe more competitive in the industry than some of the competition out there that has to partner with other companies?
Sure. Well, long term in our industry, the most important things are retention of your players. Acquisition is important, it's great, but really it's retention. Conversion of players from registering to making a first-time deposit, and from making a first-time deposit, how long are they staying active with you throughout the life cycle? How do you manage that experience so that you keep them playing and engaged at a high level for a long time? And how we do that is through our tech. We own it in-house. We have our own engineering organization. And we're nimble, we're innovative. If you come up with a great idea, we don't have to share with other companies who use the same platform from a third-party supplier. So we build everything ourselves. We build our apps, we build our websites, our UI, UX, all the player account managements, the payments, the fraud tools, the marketing tools, promotional tools, the whole suite of solutions that create an experience that's unique and differentiated are things we build in-house. That gives us a big advantage because, as Nicolo said, we're able to launch into new markets faster. The regulations come out. We don't have to wait for third parties to figure out when they're going to be able to deliver the requirements to meet those regulations. We develop it ourselves in-house and allows us to get to market fast, which is great because it gets you an early adapter of a lot of the players. And then on top of it, when you come up with a great idea like Rush Pay, it's a feature we built, which gives you cash outs in real time. A player wins and lets you approve withdrawals extremely fast, which is what gamblers like. We built that in-house, and you just couldn't do if you didn't have your own system. So owning your own tech stack like we do is critical. I will say you don't need to own every single piece of it because there's some great assets that you borrow from third parties or you license from third parties like slot games or some gaming mechanics. And so I think it's really a combination of being able to build your own and integrate third-party world-class solutions when you can. And together, I think that creates a compelling user experience.
Love that. Richard, we heard Nicolo mention the payback period. So a growing topic in the sports betting space, we've heard some other CEOs of some rival companies, have this debate of what's more important, customer acquisition or profits. And now being a publicly traded company, you know, how do you balance both those things, and maybe which is more important short term and which is more important long term, or a combination of both?
It's a great question, and you're right. There's a lot of debate in the industry. I can tell you that from day one, we built our business with the goal of being profitable. So everything we've done to date is saying we don't know how long the revenue growth is going to be the primary driver, but we have to be prepared for all scenarios. And so the hardest thing to do right is get the foundation right. You can take shortcuts by announcing splashy marketing deals, and you get a lot of volume coming in right away. But if you don't know how to retain those players, you don't invest the 10 years that we have in investing retention mechanics to keep those players. I think we did the hard work first. That's retention. Once you have that, you can increase your marketing spend and get a better throughput to the fast payback times that Nicola referenced earlier. So I think that at the end of the day, profits are tied to retention. Retention is tied to the user experience, which is a combination of product and customer service. And we focus on those things very, very heavily from the very beginning. So I would say longer term, you're going to see a shift from just signing marketing deals, which are easy to do. It takes a negotiation and willingness to pay some money. That's easy. The hard part is, okay, now the player arrives. What are you going to do to make them feel special? Make them feel like you're treating them and earning their trust. How are you going to create an innovation for experiences they don't offer anywhere else that they like a lot, so they will come back to you? Like on our casino product, which is one of our most innovative in the industry, we have a chat room. The players talk with each other, and they communicate with each other, and they engage with each other, and with us, the staff. We have trivia games, contests, all kinds of things. So players don't want to leave us and go somewhere else because they miss the community they built. And so it's those types of innovations that I think will keep the retention at the levels that we're seeing.
Niccolo, same topic for you. You know, again, it's been highly debated in the sports betting and iGaming space. And you, of course, familiar with that via Rush Street and also Genius Sports. You know, you got to look at the financials of this company. You got to see some peers. So talk to us, you know, how you feel about customer acquisition and profits and the overall market for those.
Yeah, so Richard hit the nail on the head. You know, he and his business partner, Neil Bloom, who's our chairman, you know, they're long-term thinkers, but they're long-term thinkers always about how these things become free cash flow machines at the end of the day. And I can attest to the fact that I've never met a team more focused on return on invested capital of everything they do, as well as, you know, when free cash flow starts getting generated. It is easy in my mind to see how a business like RSI could dramatically, if it wanted, dramatically increase marketing spend if they took a payback perspective similar to some of their competitors. They don't do that. They've had a lot of discipline all the way through. An example of that discipline is the fact that this company made it to IPO on only about $50 million of invested capital. That's amazing. Some of their competitors took 20 times that, right? So, you know, you look at them now and you can see that as the public markets are rotating towards profitability and rotating towards return on invested capital, you can see this company is going, you know, from strength to strength. It keeps beating numbers. It spends very little money relative to peers in building that market share. It keeps getting into markets faster than everybody else. And all throughout the time here, Richard keeps making the customer experience better and better.
Awesome. Richard, I want to turn to New York, right? So obviously in the industry, you know, we know that some of the biggest states out there, New Jersey, Pennsylvania, Michigan, we have legalization coming in New York, and Bet Rivers was able to land one of those highly sought after licenses. So talk to us about that process and why it's so important that Rush Street now has access to the New York market where some of your competition got left out.
Sure. No, it's an exciting, very exciting market opportunity for us. We're very thrilled that we're one of only 7 licenses in the market. Just for contrast, some states have 40 or 50 licenses. But New York, the largest population state that will be legalizing online gaming, is limited to the 7 that you referenced or we referenced. So what it comes down to ultimately is it was a process. They had to select companies. The state selected companies they thought had good reputations, deliver strong revenues, would be compliant, and bring value to the state. And we sort of hit on all those requirements and sort of have a great history of only being an operator in legal and regulated markets. So very clean from a background standpoint as well. And so I think when it comes to New York, it's super exciting. Why? Because obviously it's the center of the media world in our country, but also it helps you be more market more efficiently, not only nationally, which is critical. If you're going to do a sponsorship with the major sports teams, the leagues, any media partners, you're going to want to have the ability to compete and be able to use those eyeballs around the country. If you're saying I'm missing 20 million people in New York that can't bet on my product, you're going to be at a disadvantage when you seek those types of national deals. But even locally, a third of what you market in New York State goes to Connecticut and New Jersey. And by the way, we're one of only 3 companies with a license in Connecticut. That's the lowest number of licenses of any state in the country. So it's great that we know when we spend money in New York that our eyeballs in Connecticut will be getting some benefits for our company. Another example is if you're in New Jersey, you're not in New York, then you're being really inefficient with your marketing in New Jersey because you share media market with New York. So I think when it comes to marketing efficiency, as we talked about earlier, profits, if you're not in Connecticut, you're not in New York, you have a real big disadvantage nationally and in the Northeast.
Nicolo, same topic to you. You just heard Richard talk about that tri-state area. It's going to be very important for Rush Street going forward. New Jersey, Connecticut, New York, having access to all 3 states now. How important is that for Rush Street going forward?
Look, I mean, this company keeps getting more and more momentum, right? And they're showing that they can deliver on being first in the new states. They're showing they got the best tech stack. They've got the best payback periods. They're crushing numbers. I think Richard's an incredible leader. I think he's got a fabulous team around him as well. But he's been doing this for decades, and expertise matters ultimately. I think there's a plan here that has actually borne out fruit from when we announced the PIPE, when the deal closed, every quarter since then. And so we're very bullish, obviously, on this company grabbing a good chunk of the rest of the U.S. states continue to liberalize here. I don't know the ins and outs nearly as well as Richard on how you can make sort of interoperability happen between states and so on. What I do know is that this is the best of breed company when it comes to fluidity around the customer experience, understanding the mindset of gamers and gamblers, understanding also how to cater for all genders and all ages, which is a really important point. This is a company that's been focused on everyone, not just sort of male, sports bettors. And I think you're starting to see that come in the numbers as well.
Perfect. Richard, I'll turn back to you. I know you probably can't get into specifics. I already saw some questions here. There are some rumors about potential acquisitions, either, of your company or by your company. Can you just talk broadly? What does M&A look like in the sports betting and iGaming sector? Is that something we're going to continue to see? And, is Rush Street going to be active in the M&A space going forward?
Well, it's a great question, and thanks for asking it. I think you hear a lot of articles, a lot of rumors, things like that. And at the end of the day, the reason why you hear those rumors is we have things for ourselves that are valuable that others want or need. So you look at our tech stack we talked about. A lot of companies don't have a tech stack in-house, and they do. It's not at the world-class level that ours is at. Number 2, market access. We talked about that. We're in all the major markets: Michigan, Arizona, Illinois, Pennsylvania, New York, Connecticut. Other guys aren't in all those markets. Number 3, we have our own casino, a leading casino product. Casino is the most profitable category in this industry. A lot of the sports-only companies or historical sports-focused companies don't really understand the casino category level we do. So the sophistication of our product really makes us attractive, I think, and that's why you hear about it. Well, that's the same reason we built it ourselves, so we knew how valuable it would be. Number 4, we're diverse. We're one of the leaders in Latin America. In Colombia, we're number 3 out of 20 operators. And we have a lot of opportunity for growth in all of Latin America, which is an exciting market. Very big populations, love to gamble on sports, and also have a history of having casinos in most of those countries. Number 5, we have scale. We're approaching $500 million, as a target. And so in a year, and that's a large number that helps anybody become a real leader in this market, just like we are top 4 or 5 right now in revenue size in the country. So I think when you have all these things going for yourself and nothing blocking us from continuing to succeed, I think you're going to have a lot of rumors and things like that. In the day, we're just focusing on improving the user experience and keep advancing our advantage that we think we already have.
In the long run, Chris, what I'd say is the businesses with the best return on invested capital tend to become the champions in the long term. And that's why we picked, obviously, Richard and Rush Street is they have that better mousetrap, as I've said to you before. It's like you put $1 in, they get a lot more dollars out than everybody else. And so over time, those advantages just keep compounding.
Perfect. Yeah. Obviously lots of rumors out there. I know you guys can't get into specifics, but I had to ask, and get into M&A. Another topic, maybe this is the coming elephant in the room, right, is that we're seeing some cancellation, some postponement, some event changes across the sports industry due to COVID-19. Obviously, that's something Rush Street already weathered, over the past couple years. What are your comments on how this could impact the business going forward? Richard, I'll start with you here.
Well, I think the first is that if you postpone events, which is what you're starting to see a little bit to other days, it actually works out well. For example, NFL is going to have 2 games tonight, 2 games tomorrow night, primetime games, which is exciting. We also know that for the first time since 1978, the NFL expanded the season this year, so we'll get an extra NFL game. But I think the leagues and the media, everyone's kind of used to now the adjustment and the flexibility. The sports books are very flexible. We know how to manage the situation very well. I think you might see more of the changing and the shift and all that, but you're not going to see a wholesale closure of the events. I think you know how to play it. If you need to in a bubble, you know what to do with limited crowd sizes. So we don't think it's going to have much of an impact. We always, of course, mention that in our investment decks that you always have subject to changes from due to COVID. But at the end of the day, we feel like everyone's experienced now on how to manage this, and we'll continue to see this very exciting rest of the football seasons for both college football and NFL. And then, of course, you have the exciting NBA and NHL seasons ongoing right now, and March Madness just around the corner. So I think the schedule's going to be full, but we will manage it accordingly as we have for since March of a year and a half ago.
Yeah, I mean, I think, Chris, to be honest, that lockdowns, shelter in place, I mean, they're terrible for most industries, but they're pretty good for gaming. And I say that across all the gaming businesses I'm involved with. Like, they tend to get a shot in the arm. We're the best value entertainment per dollar, typically. And because Richard's built, I think, the preeminent consumer experience, he's going to pick up share in a world where people are commuting less and they got a little bit more time on their hands. We saw it last year, or 2 years ago, and we'll see it again.
Love it. The other question I have to ask, we got into versus competition, we got into profitability. When we talk sports betting, a lot of people know the big 3 brands, right? DraftKings, FanDuel, and BetMGM. How does Rush Street kind of position itself to grow market share and grow that brand awareness while still focusing on the profitability side? Richard?
Right. Well, like in Colombia, I referenced it earlier, we're a 20% market share. We started there without anybody speaking Spanish in our company, and no existing brand, no database, and we're profitable there. So it's very possible to grow those brands, and that's what we're doing around the country right now. I mean, just as a sense of size growth, we were, a year ago when we went public, last December, we were in 5 online markets. Today, we're in 11 online markets in North America, and in a few months, we'll be in 16 or 15. So the growth is and as you grow, you're also getting all the affiliate marketing, all the paid search, all the sponsorships we've done with major teams. We're partners with the Flyers and the Penguins. And then the NBA, we have a couple of partnerships with a couple of teams, including the Detroit Pistons. So I think that's going to continue to sort of grow our brand awareness as we continue to proliferate our social media strategy, which is focusing on hiring really high quality talent, people that know gambling themselves, that can speak the language, who actually have a contributions to make to the audience. So I think we're building the brand day by day. It didn't start with the same awareness as of DraftKings or FanDuel, but we also didn't spend $1 billion building a brand awareness before the PASPA law passed. So we're catching up now, but we're catching up at a very high pace.
I mean, to put this in context, Chris, you and I talked about this past. The year before we announced our partnership with RSI, this business did something like $60 million of revenue. I think last year was maybe 275-ish, something like that. The original guidance for this year, when we announced the deal last summer, was 320 of revenue, and I think Richard's latest guidance is 480, something like that, or more. I mean, that's amazing. They're 50% bigger. They're 100% bigger than last year, 50% bigger than the original plan. I mean, that is a commitment to operational excellence that everyone can applaud.
Definitely. Richard, on that note with guidance, you did raise guidance to a range of 480 to 500 million in the most recent quarter. You just heard Nicolo talk about that. My question for you is, do we have a timeline on maybe the New York launch, and is any of that factored into that increased guidance by the company?
Yeah, I know we don't have any timelines to share. Obviously, the only thing you've seen publicly is sort of the goal for the I've seen raised being Super Bowl. There's really no inclusion and guidance of markets that we're not live in currently, which would be including New York.
Perfect. Spencer, I know we have some questions here in the chat, very
do.
lively chat during the interview. What do you got for the guys here?
There was a question about, I guess it's referring to an interview with the chairman of the Connecticut Lottery, and he hinted at a rebranding of Sugar House. Richard, do you have any comment on that?
We have 2 brands that we operate, Sugar House and Rivers, and we operate Sugar House in 3 states, Rivers in the others, and so we haven't defined or publicized any brand strategy changes that we're planning, but there's always certainly a desire to try to unify when you can the brands.
What about your penetration into Ontario? Some Kramer 90 wants to know about that.
It's a fun name. We are planning to be in that market as soon as we can be. It's certainly one of the most exciting markets opening wide. It actually would be the second largest, population in the North American market that you could be into, right? With New York being legal and then Ontario, and then I guess you have Mexico as well. But I think talking about the North American markets, those are the top 3. So it's also going to allow casino, which is really exciting for a company like us, as a proven track record of being strong there. And don't forget, our casino players are worth about 5 times more on average than a sportsbook player. So in a market the size of Ontario, which I know if it was a U.S. state, people often say it would be a top 5 in population, with the maturity of a player base that likes to play casino games for many decades. It's a really, really exciting market. And that's opening. It's hopefully going to be open in February. Could be into March. It's a little bit unsure the timing on that. Really being driven not by us, but by the state of the regulatory body there, trying to take a very complex process and get the whole industry live.
That's an important point, actually. I mean, we haven't touched on it yet, Richard. I mean, we have a lot of pride in the casino business. It's kind of the core of the company. This is not a sports betting first company. It's kind of a casino first business. And I think the sort of psychology of that player base, male and female, young and old, is one of the hallmarks of really Richard's expertise base and what he's assembled here and what he's executed on and delivered.
Love that. Well, I think that's it for the questions. Again, there were several questions about maybe an ESPN or another company out there floated out, but I know you guys already hit on that. So Richard, Nicolo, thank you so much. Again, Rush Street Interactive, ticker RSI, sports betting and online casino. Thank you both, gentlemen, for joining us on Benzinga Live today. We look forward to talking to you guys soon.
My pleasure.
Thank you.
All right, happy New Year, guys, and happy holidays.
As well to you.
All right. Chris, Michael says, don't be scared. If you guys are still there, Michael Montero says, don't be scared of ESPN. Richard, take note. All right. Chris, to my knowledge, I don't have any exposure at all to any gaming companies. Should I?
I think you should. I mean, sports betting. So Spencer, you're from New Jersey, right? And I think that was true. One of the big points. New Jersey is like the leader in sports betting and online casino. And one of the big questions is New Jersey a leader because they were first to market, because they have a decent sized population, or do they have the benefit of a lot of people from New York, crossing over, betting in state, going to sporting events in New Jersey, betting at those sporting events? So that New York market is a monster, right? And Bet Rivers has access to that. Some rivals, including, like Barstool, they didn't get access to New York. They lost out on the bid. So I think that also makes Bet Rivers, Rush Street here more attractive for a potential acquisition. Again, I know Richard and Nicolo can't comment on that, but there are some rumors that is looking nice to a company like an ESPN or a Fanatics that's looking to get into the sports betting space. You heard him talk about the tech stack. That's a key differentiator here. Spencer, I love the sports betting space, but again, someone who bets on sports and invests in sports betting companies, I'm a little biased here. So what can I say? Yeah,
I mean, just anecdotally, I can confirm that going across the river, going from New York to New Jersey for a day of just betting on football is was not anymore, but was 100% like a thing that people, at least my friends, would do, right? Because they couldn't do it, in New York. I just had a thought as well. Oh yeah, on the questions about the specific rumors of Fanatics, the ESPN. Look, I respect it. You guys can ask it. You know that we will ask what you want us to ask, but very often these questions don't get the answers that satisfy anyone. So just know that going in. If you're going to ask a question about a specific rumor, 99 times out of 100 it won't get addressed. That one time it will get addressed, but usually they know what they can and can't say.
We tried, right? We tried.
Yeah. Yeah, no, I mean, look, we'll ask it. We got no problems asking it, but, like, we're not going to get the answer that any of us want. So, like...
AB, so question for you. I know you have looked at some sports betting companies and apps before. So, obviously DraftKings, FanDuel, BetMGM, the three big ones. Interesting topic of, profits versus customer acquisition. So, as someone who bets on sports, I'm constantly getting offers from these companies, right? Here's free money if you deposit. Here's boosted odds, right? If Tom Brady throws a touchdown, we'll pay you plus 500 if you sign up, right? How important do you think that is? Obviously short term right now to get customers, but do you think some of that starts to go away when these companies really have to focus on profitability as publicly traded companies?
Well, I think eventually, yeah, you'll see some of those promotions start to kind of dwindle down as companies, try to raise their revenues. But right now, I mean, Chris, it's still such an early industry. I mean, we're legal in 10 states or so. So I'd imagine that as this expansion continues and more states become legalized, we'll kind of see that state by state, that land grab per se of the market share from different companies. So, I'm from Missouri. So when Missouri legalizes gambling and say they give 5 licenses to the 5 companies that are up on the screen right now, they will all put out promotions to try to grab that market share in Missouri. I think that's certainly one of the reasons a lot of these stocks have not been doing well the past 6 months or so, is because it's kind of common knowledge now among investors how much money these companies are really spending trying to acquire customers. And I mean, I don't know. I think we'll have to know long term, like, is there going to be brand loyalty to certain apps, to certain things, or will people just have, all 4 different apps that are available in their state, and they can look at the app by app and see which one has the best line on the game they want to bet. So I think it's all too early to say, but
I feel like I'm probably the target here because I'm unlike you guys. I'm not really a big sports bettor, but I do it, every couple of months when I remember that it's a thing, right, on a Sunday morning, and I'm like, oh crap, I want to bet on some football today, and I've got zero brand loyalty. I'm all about
you are the
show me the best offer.
Yep.
Where's the best offer? That's where I'll go. And so I've gambled. I've got it on every platform. It seems like, because where's the offer? So
yep.
I'm probably the person that they want to get, the casual. I don't know. Maybe the market is split up into 2 groups. There's the brand loyalists who, I'm only a Barstool guy. Yep. I'm only a Bet Rivers guy. Versus the people like me that are like, hey, I'll go wherever the heck.
Yeah, and that's something that Portnoy's talked about too. How Barstool has a very loyal fan base, and in a couple of years they're going to be able to take away from DraftKings and FanDuel. Again, it's a huge debate in the industry, and I really liked hearing from Richard and Nicolo, what their thoughts were on some of those topics. So I really had a lot of fun with today's interview. Spencer, I hope you learned something about the sports betting market. Maybe you'll have to place some bets today after that. I mean, the Lions are on a win streak after all, so I mean, maybe if you wanted to
wait, they won 1. Is that a streak?
That's a streak. 1's a streak, right? It's better than 0.
Is 1 a streak?
You got to start somewhere.
Is 1 a streak? I don't know
they're like 2-3-1 in their last 6 games. I mean, come on, that's
so they're basically 500.
Yeah, that's pretty good for them.
Wait, what was I about to say? Shoot. Okay, I forgot what I was about to say, but there's a question in the chat that Richard recently converted preferred shares into common shares. Why would someone do that, in your opinion? Good question. Well, there's a bunch of reasons. We obviously are not Richard, and we don't know. But one hypothesis could be he wants to do something with those shares. Maybe he wants to sell them in the open market. Maybe he was doing just some end-of-year tax finagling, right? And it has a different cost basis, and they prefer to the common. There's a few reasons, Ivan. I wouldn't read too much into that, though.
Yeah,
it's not as if he. Yeah.
It's always hard at the end of the year with taxes and stuff when you get into stuff like that. Also, remember, Rush Street has only been public for so long. So, I mean, he co-founded this company. He has a lot of equity in the company, a lot of preferred shares. So, I mean, I would guess, that, he can make different decisions based on, his own financial state as well.
True. All right, Chris Katje. Wait, Chris, did we miss it? I know we had to pause on like the news stuff for the interview, but did we miss anything on the news front as far as SPACs are concerned? Are we all good?
That's it. I mean, like I said, 4 deals today. We had 11 deals last week. I mean, this is a shortened trading week. I mean, maybe we get some more deals announced tomorrow and Wednesday. A lot of M&A activity. I was actually surprised, Spencer and AB, to wake up this morning and to start to see those deals roll in. I was thinking this was going to be a quiet week for M&A, but I was completely wrong on that front.
Maybe they're just all like, let's get it out there before the end of the year.
Maybe next week will be the busiest week on hand. Maybe we'll see that. So all these announcements before the end of the year.
Chris, what's the overall sentiment like in SPAC world heading into 2022? Because we've seen, this SPAC mania, SPAC craze, if you will, about a year ago, where it was kind of all anyone wanted to talk about or invest in were these new SPACs, and then we saw a lot of those same SPACs get beaten down. So where do we stand right now?
Yeah, I actually have a poll going out to some SPAC experts in the industry working on an article of, the best of 2021 and also what's ahead for 2022. So I'm glad you said that, AB. But I really think we still just have a massive amount of SPACs out there. I've been calling for months that we need to have less new SPACs come to market, right? Because there's still 400 plus SPACs searching for a target, which means you're going to get some unfortunate deals in terms of valuation. I think the important thing here is to look for those companies with real revenue, with profits, with a clear line of sight. I mean, you heard Nicolo say when they did that deal, their original guidance for this year was $320 million. Their new guidance is now $500 million. So I think that's something I'm looking at, right? Find the de-SPACed companies that are raising guidance. They're not, cutting guidance. They're not, no longer issuing guidance. They're going head on. They're raising guidance and have that strong financial plan in place. Great question.
Got it. Yeah, no, thank you for clearing that up. I was just curious because I knew you would have your finger on the pulse a little bit more than I would as far as just what the overall sentiment is like in SPAC land right now.
Come on. New year, new me, new you, new Chris, new SPACs. Everyone's positive into the new year.
I mean, we're no longer getting those big pops on day one. So I think it's more important than ever to really do that due diligence, which is why we're doing interviews like this, why it's important to look into these companies, because if you want to make money on these deals, you really have to, dive in and know what you're investing in going through that SPAC process.
And you mentioned the guidance thing, now a lot of these SPACs, frankly, don't have the history to raise their guidance. Yep. Now that we're a lot of them have been public for a year or more. Okay, now we can actually do that. So maybe that's a catalyst.
Definitely.
Wait, Fear King, I see your questions. Okay, you guys want to? All right, we'll do rapid fire quick. Someone asked Chris for your thoughts on Genie. Do you have thoughts on Genie?
I still like Genie. I mean, Genie is the thing behind the thing. They provide sports betting data for all these companies. I mean, they have a duopoly with Sport Radar. I mean, Spencer, anytime you have a monopoly or a duopoly in an industry that's rapidly growing, that's somewhere where I want to be. So I'm a fan of Genie. I am long Genie here.
Okay, and then PL. I don't know what PL is.
Yeah, so PL is Planet, so another Nicolo SPAC.
I know a Planet. Okay,
right? We talked to him. We
had them on the show.
Yeah, they were on the show. It's kind of like the Bloomberg of satellites, the data, the imagery. The stock did drop. They actually recently reported earnings. They raised guidance again. I mean, again, a company that's got real revenue. They raised guidance. This is a company I'm long. I love the satellite space. I love the thing behind the thing. And also worth noting that Planet Shares PL got added to the Metaverse ETF, ticker META, today by Roundhill. So again, Metaverse space is hot. PL is involved there as well.
Okay, I hope we got to your questions. We can't monopolize Chris this whole day. Chris Katje is Benzinga's SPAC guru. He's a staff writer, and Chris, this might be. Will this be the last time you join the show for the year? I'm not sure because I'm not quite sure if we're doing shows at the end of this week or next week.
I don't know our show calendar, so I mean, I'll be on when I'm on, I guess. So
we'll talk about.
If I don't see you guys, happy holidays, happy New Year, and same to all the viewers out there as well.
Same to you.
Thank you guys. Have a good one.
All right, have a good one.
You as well, Chris. Thank you, Chris Katje, for coming on the show today to talk about some SPACs and then lead the interview with Rush Street Interactive. Please smash the like for Chris. Such a special treat to get Chris on the stream on Benzinga Live.
Yeah. Especially because Chris was like powered through. He didn't have power for a couple days, and he got it back, and he's like, didn't miss a beat.
No.
So, all right. Hey, it is 12:24. So we're not going to have Matt Hammond on the show today because, frankly, there are no IPOs this week. So why would we have Matt on to preview nothing? So we'll get Matt Hammond on when there are actually IPOs on the calendar. We're going to have Jake Wujastyk on at 1. We're going to have Chris Capre on at 1:30. In the meantime, Aaron Bree, how was your weekend, man? We should probably just take a step back and just talk about life. How was your weekend?
It was okay. Yeah.
It was okay.
Yeah.
All right.
How about you?
It was good. I caught up on I watched a lot of things, man. I saw Spider-Man. If you saw Spider-Man, put a 1 in the chat.
Wait, you went out to a theater and saw Spider-Man?
I went out to a theater. It was pretty crowded. Obviously, you know this because the box office numbers were huge. Every theater was crowded. That's kind of the point, right? So, saw Spider-Man. I'm like a month behind pop culture usually, so I finally got around to watching Squid Game. That was fun. I started watching the Beatles documentary on Disney Plus, Get Back.
Okay.
That's fantastic if you're into Beatles or music history at all. So, did I have to wear a mask? No, you don't. I find you don't have to wear a mask anywhere, really. They can encourage it, but I haven't been told. I think like one store I went to when I was out shopping like a month ago was like, please put your mask on, like when you walk in. But like no one's enforcing mask policies, really. I think, at least that I've seen, that we encourage you to wear masks in accompanied with CDC guidelines. Please wear your mask, but no one's making you do anything. You know what I mean?
I did not know Netflix was a publicly traded company back in 2002.
Oh yeah, dude, the DVDs.
I know. Well, I knew that, but I remember my family had a Netflix subscription when it was just mailing DVDs, but that was in like 2007, 2008.
Yeah.
Does Netflix still mail out DVDs in any capacity?
I don't think so. I think actually there was a hullabaloo because they stopped doing that. Like I think it was like 3 or 4 years ago. I think they spun that off into a different company. Ah, man. I vaguely remember.
Redbox is also publicly traded.
Didn't that SPAC?
Yeah, I think so, yeah.
Yo, when's the last time you've been to a Redbox? It's been probably in college. I think was the last time I went to a Redbox.
Yeah, years and years and years.
Okay, Backwood. Yeah, that could be true. I can only speak for my state, obviously. But actually, no, Backwood, you know what? You're right, because when I was in New Jersey, they were also a little bit more strict about that. So it could just be like a New York, New Jersey thing. In Michigan, they're not very strict about that sort of thing. So, anyways, great movie. I recommend everyone see it if you're into Spider-Man and Marvel and all that sort of thing. I had a mask on at the beginning. I'm not going to say it stayed on the whole time because, but whatever. Okay. So, Aaron, make any trades today or Friday that we can talk about?
I did. I can go ahead and share my screen.
Oh,
yeah.
Boy. This should be fun.
Last Friday, I opened some positions. So I had a Zoom call going into today. I had an Activision call, and I had a Carnival put.
Oh, no.
So basically, I was playing the... why are you saying oh, no?
Because have you seen Carnival today?
Well, I sold my Carnival put when it opened down.
Oh, okay, great.
Like,
yes!
It opened down like 3% today. So Carnival opened down 3.5%. I got out of those puts. Carnival came back up from there. So I don't even know what I ended up making on it, but I made a small profit on that. The Zoom calls, I got them on Friday, and Zoom actually had a good day on Friday. I was hoping for it to. So here we can see on the 17th, Zoom opened at 184, closed at nearly $200. So we saw Zoom go up nearly 10% on Friday. I was riding that all the way up. I was hoping for another leg up this morning on the Zoom calls, but I sold them for a nice profit. Let's see, I sold. I bought the contract for 260, sold it for 430, so not bad there. And then Spencer, this morning I opened a Netflix call that at one point I was up like a lot of money on. Here I am.
Yeah, Netflix. Does anyone have an idea as to why Netflix had the?
So at
pop
one
that it
point
did
on
today?
this Netflix call, I was up $800.
Hey now.
And now it's come all the way back down in the red.
Hey no.
So yeah, that was one where I was even saying on live trading while I was up that much, like here's where I would be trimming my position, but of course, right now I can't. So I'm basically just hoping Netflix gets another rally in it before the end of the day, which I wouldn't. I'm not expecting, but I also wouldn't count out right now with how Netflix's chart is looking, and also just what's going on. But that's the thing right now, Spencer. I mean, the markets are obviously. If we pull up the VIX, right, the VIX is up over 10% today. So a lot of uncertainty and volatility in the market, and a lot of that is from the Omicron COVID variant. But it doesn't seem like a lot of these trades that have benefited from COVID in the past, such as Moderna, Pfizer, Zoom, it doesn't look like any of these are. There's no consensus out there saying, okay, the COVID trade is back on, you know?
Yeah, that was the weird thing. It was like this morning. There was like sort of a consensus because Zoom, if you pull up Zoom, I'll pull up Zoom actually. Where's my chart? That's not Zoom. Zoom was your leader, right? Zoom was having a great morning. Hours ago. Obviously, once the open hit, we dropped a little bit, and now we're holding steady around the 200, 201 area. But Zoom and your vaccine stocks were your clear pre-market leaders. Those all came off at the open. So I'm not quite sure what to make of today, to be honest with you. I really don't know. You had a huge pop in the cruise liners. That was, I think, due to Carnival's earnings report this morning. But RCL had a pop, NCLH had a pop. The airlines had a pop, right? American had a nice pop there at the open. They've all come off their highs. We are still broadly red across the board. I think every index still in the red, and every sector still in the red. Yeah. So I'm not quite sure what to make it today. I'll be honest with you.
Yeah, I mean, I think I've said this before. I feel like a few times over the last year or two. I feel like we'll know a lot more, both in terms of the market and just overall with what's going on with COVID in a couple weeks.
A couple weeks. What is that? Is that just like? Why do you say a couple weeks? Is it just because?
Well, I mean, for a couple reasons. Right now, in terms of COVID, I think we'll know more in 2 weeks as far as, so we know there's a lot of spread going on right now, but we'll know in 2 weeks what the outcome of that spread is. Is it truly, okay, less hospitalizations in the last wave, it is less severe, or will we still see a big spike in hospitalizations? Who knows? That's why I'm just basically saying I think there's some uncertainty surrounding what's going on with this new COVID wave, where now we can finally say we're in precedented times, because we've had
Precedented.
Yeah, we're in precedented times, because
Yes.
we've had a second COVID wave before. We had the Delta wave. Now we're getting the Omicron wave, but we don't the storyline is not finished with Omicron yet. It's very possible that it ends up being, okay, this is way less severe than which a lot of reports are indicating now, but who knows?
On a side note, I got all the vaccine stocks up here, not all of them, but some of them, and that blue line, or the teal line, is Pfizer. Look at Pfizer today. So Novavax, BioNTech, Moderna all popped in the pre-market, all trading significantly off those highs. In the case of Moderna, even actually in the case of Novavax and Moderna and BioNTech are actually down for the day. Look at Pfizer. Look at the teal line. You can't really stop Pfizer. It kind of just goes up every single day. It's held up so much better relative to the other names on this chart today. I don't know why. That's just the way it's been. Let's pull up a daily. Come on, daily. Where'd you go? There you go. Look at Pfizer the last couple months. Does anyone have any ideas here? Why is Pfizer all of a sudden outperforming all the other vaccine stocks? It's not all of a sudden because, like you can see here, it's been this way for 2 months now. But I don't know. It's kind of crazy. I mean, it's Pfizer. It's like slow and stodgy. But not anymore. It's at all-time highs. Go figure. Not quite sure. What else is the chat talking about? Let's get that off the screen. We will at some point look at cryptos at some point today.
Yeah, we got about half an hour till Jake Wujastyk from TrendSpider is going to join us. Another stock I've been watching, Spencer, one that we saw get absolutely beat down last month was Asana. And on Friday we got a headline that the CEO bought a bunch of stock back in Asana.
I feel like he's been buying. I think I heard that he's been buying a lot.
I know. Let's see.
I think he like always buys. Here, let's check in the pro right now.
Well, he bought $81 million worth of stock in 1 week last week, bringing his purchases for the month to over $195 million. Yeah, so
that's
this is
a lot.
We've talked about before, right? A lot of times when you're looking at insider trading, you'll see so and so sold shares, whatever, and there's a lot of reasons to sell a stock, right? You might have to sell some for tax purposes. You might want to sell some because you just need cash because you're buying a new house or something. But the adage goes, there's really only one reason to buy the stock back, right? A multitude of reasons to sell the stock. It's hard to infer sometimes why an insider would sell the stock. But if an insider is buying the stock, that's usually a telltale sign, okay, that insider thinks this stock is going to go up. And what we've seen is since we've gotten those headlines from Asana's CEO, the stock has gone from $64 to $76. So this was a stock that was trading nearly twice of what it's at right now, right? We have highs of around 140 back in November, only at $76 right now. I haven't taken too much time to do some due diligence on Asana. I know we use Asana here at Benzinga, and it is a very useful, practical tool. I think there are a lot of other softwares out there that do similar things. So I would need to do some research to see what is Asana's true moat. What do they do to differentiate themselves from Slack, from Salesforce, from all these other tools that you have out there for remote work. But with that being said, do I really think Asana is worth half of what it was 3 weeks ago? No, not at all. So this is one that I would just add to the watch list. Certainly a bullish sign seeing the CEO, that's Dustin Moskovitz.
Yeah.
Moskovitz bought more than $150 million worth of the stock. So let me know in the chat what you think about Asana. That's ticker ASAN.
It got so overdone, though. That's the thing.
I mean, in the last week, it's up 24%.
Yeah, so you want to buy it now? You want to buy it after it rose 24%? Okay. Not for me. All right, but I mean, like you said, we use Asana. I don't know. Just because we use it doesn't make me bullish. I don't know, man. Software names. How high did it get before? What's the all-time high in Asana? 150,
141, maybe.
Man. Okay. Firod King is following up with me on Palantir because I did say I would buy it if we got to the bottom of the range. Well, we're there right now. So here's what I just did while Aaron Bree was talking. Firod King, I just took my shot. I shot my shot on Palantir. Okay. Small position in the trading portfolio on Webull, which is the one that I make the short-term / swing trades on. So I did just take a nibble at, what's my cost basis here? Come on now. Help me out. Thank you. 1797 is my cost basis in Palantir. We're at some support, right? A couple of weekly low. 1, 2, 3, 4, 5 weekly lows and whatever that weekly high is in this area. All right, yeah, I'll take a shot on Palantir here. Daily support too, right? We're at the bottom of this range. This could end up being a loser for me, but I'll take a shot. And as far as an out, you should always have your out, always have your risk tolerance known before you go in. My general rule of thumb is if I can't find a level nearby, then the rule is 10%. This is on my trading account, okay? This is on my small Weeble trading account where I'm willing to, I would never like risk 10% on a trade with my quote unquote real money, but to me 10% seems like a lot. So 10% of my account is what I'd be like willing to lose if I couldn't find a level on the downside to like quote unquote use it as like a mental stop. In this case, I kind of like this low. What is that? $17, 17.06. I kind of like 17. So what I'm going to do is I'm not going to throw out a stop now because stops have gotten just you don't know the market you're in, and I feel like stops have been getting triggered left and right. You just get chewed up. So this is going to be a mental stop for me. A mental stop at 17. Have it on the radar. If it falls below 17, I'm done. That's my trade here in Palantir. So long from basically where we are right now in Palantir. There's my trade. Why not wait for confirmation, Shelly? I could have. You're right. I could have. This is more of a case of me saying I would take a shot down here, and now we're down here. A lot of times, Shelly, I say things, and then I put it off or I forget, and I regret it. So this is me shooting first and asking questions later.
So speaking of earlier, when we were talking about RSI and the different betting stocks, we were talking about the cost to acquire new customers and kind of the promotions and deals that companies were throwing out to acquire those customers. So I was reading about Netflix, 'cause I do have these open Netflix calls until at least tomorrow morning. Netflix announced that it slashed its price for Netflix subscription in India to compete with Disney Plus and some other services, Hulu, whatnot. Can you guess in U.S. dollar amounts what they cut their price to in India to try to acquire some of this market share?
Do you want to give me the hint as to what it was before, or is that too much of a hint?
Let me see.
By the way, my biggest takeaway from watching Squid Game was, holy cow, the conversion rate. 10,000 Korean won.
Oh, yeah, when they were talking about like 50 billion.
10,000 is like $8.
Yeah.
It's like, holy crap. Anyway. You don't have to tell me.
So in 2016, when Netflix launched in India, the plan started at $750 a month.
Okay, so they just cut it from $750.
They might have cut it before
Okay,
then.
I'm gonna say $4.
$2.61
Oh
a
my
month.
gosh, $2.61 a month. But what does that get you? That gets you whatever is on Netflix in India,
I don't know. It says
which could be nothing for all I know.
it says it is cutting its basic plan in India by 60% to 199 rupees, equivalent to 261 a month. Netflix has also lowered prices on its least expensive plan, which offers mobile only viewing to 195 monthly. It's
Mobile only viewing. Why the hell would you want that?
if you don't have a TV. If you're only gonna be able to watch it on your phone.
Wait,
anyway.
can you do mobile only and then screencast to your TV? That's a hack. Save some money right there.
I don't know. That's a good question. I don't know if they have mobile only plans in the U.S. Oh, and wouldn't you know it, while I was talking about it, Netflix got a tiny little bounce. I need it to come. I can't believe it got all the way up as high as two. It was up more than 2.5% earlier this morning. And part of the reason that I bought these calls was because it was just Netflix was showing so much relative strength, like, not just against the overall market, but other FANG big tech names.
All right, Deepa says there is a, quote, ridiculous, unquote, amount of Indian original Netflix series. Okay. Obviously, we're not in India, so we don't know. I believe you.
Microsoft down 1.5%. Apple down 1%. Netflix we know is up in the green. Amazon is down more than 2%. Who am I missing? Google down 1%. Facebook down. Oh wow, Facebook down 3%. I wonder if that part of the reason why Facebook's down more than other FANG stocks is because they were announced as like the worst company of 2021.
Who said that?
It's a good question. I think Yahoo Finance maybe.
They said Facebook. They said Meta is like the worst company for like humanity of the year.
Yeah.
Not the worst stock, the worst company.
Yeah, and Yahoo Finance's every December Yahoo Finance selects a company of the year based on its market performance and its achievements that particular year. In 2021, Microsoft took home the crown.
What? Wait, for the best or the worst?
The best.
Microsoft?
Yep.
Last year.
Yep, smashing through the $2 trillion market cap and seeing a 53% surge in its stock price as of December 16th, year to date.
It wasn't Moderna or one of the vaccine companies.
All right, you can take it up with Yahoo Finance.
I will. Yahoo Finance, you'll be hearing from me.
So yeah, then on the flip side, on the worst company, Facebook, or Meta, they're talking about significant complaints of censorship.
All right, so here's what I want to know, Aaron, because like you guys know that I'm long Disney and I don't ever intend to sell my Disney, but the more it falls, I've already bought Disney on like 2 dips. Okay, I've averaged down twice. The more, and I'm not quite there yet, but the more it falls, the more I get into maybe buying more. I know I shouldn't. I have enough Disney as it is. What is your take on Disney here? And I'll pull up a chart of Disney.
I think it'd be important to talk about on what's.
This is a long-term thing for me, right?
Yeah, in the long term, I like it. I mean, I think we'll look back and say, oh, we could have gotten Disney at $145 when it was nearly at $200 a few months ago, 100%. But just looking at the chart, if we don't catch the support and come back up soon, it looks like we've got a lot further to fall down to about 130, 125. So if I don't see, what's that previous, like a couple weeks? No. Can you zoom in? Yeah.
The low was 142.04.
So we're already. Oh no, we haven't reached that low then.
No, we have not reached that low.
Okay, so if we reach that low and we don't bounce, if we fall through that, I would expect Disney to keep coming down in the short term.
Okay. I'm not doing anything. I got nothing going on here. I'm just, it's falling a lot. Someone in the chat asked about Fubo. Fubo was one of the stocks that was up on Friday. Had a good day Friday, popped off the open, and now you haven't held. So not only did you not hold today's open, or Friday's close, but next level. I mean, if you want to take a long, your next level where I would put a stop out would be on Friday's low, which is what? Which is 15.18, right? Long term, who can say? Honestly, who can say? Short term, that'd be my setup on the long side. You buy here, you stop out at 15.18 because that was your most recent low. There's not much else to say about it. Oh, here's some maybe longer term support. A low in the a couple lows in the mid 14s, one from May, one from a year ago. There's nothing really to say about Fubo. I mean, it's in a long term downtrend. That's what I said on Friday. If you recall, I believe I said it on this show. Like, I would much rather look to fade the move in all of these stocks that are up on Friday. Zoom, Fubo, Teladoc.
Yeah, I know over the weekend the COO of Fubo Gaming resigned.
Oh, I didn't know that.
Yeah.
All right. Thoughts on PayPal? Did it stop going down yet is my question. Did it stop going down? Let's pull up a daily. Yes, it did. Okay. All right, so that's notable. Cool. So I wasn't sure if we got all the way back down to those lows, but we have not gotten back down there yet. So this one's easy, right, Aaron? You've got how many lows in the same area? 1, 2. You got like 5 lows, all in the 179, 180 area, right? Yeah, like 5 lows from the first week of the month. So that's where I'd stop out, right? I would always give myself some more room. So I would always, if I was going to go long PayPal here, I would say, okay, long from 182, stop loss at 179 even or whatever, right? 179.10. I always go below the stop, below the support, right? Just to give myself a little bit of flexibility, and kind of, in some cases, prevent the washout. It doesn't always work. Right, I got washed out in a firm, and then it ripped in my face. But I always try to go below the support just to give yourself a little bit of room. So I would say you can go long here and with a stop at 179. Sure, that's not a bad setup. Although I don't know if today is the day to do it. I don't know. PayPal is tough because like PayPal is like great company, right? Growing earnings. But it had this ridiculous run, and it's gotten punished. Isn't PayPal also like a crypto play? Yeah, because they own Square.
No,
they own Venmo.
They own Venmo.
They own Venmo.
You can buy crypto on Venmo. I don't think a lot of people do that. Yeah, Square owns Cash App. PayPal owns Venmo. I don't know. I mean, I think it all depends on what time horizon you're looking at. I think long-term PayPal will continue to grow, and the stock price will reflect that. But right now, it is certainly in a downtrend, and I would maybe be waiting till we see some sign of reversal or confirmation to look to get back into it. I'm curious though, like I'm just looking for like any stocks that are kind of like any stock that's not just like straight down today. Like what's been like moving?
Straight down or not straight down?
Yeah.
Lots of things have been not straight down. A lot of things popped off the open.
I'm trying to find
like Zoom is not straight down today, right?
Yeah.
It's up, it's down, it's up, it's down. Someone in the chat asked about Robinhood. I would kind of throw the same logic, and I didn't get to this point yet. But what I was gonna say about PayPal is like, it's a crypto play. I feel like if crypto were to get hot, like hot again, PayPal would catch a bid with that, and I think so would Hood, right? I think with Hood, your easiest way to play this is like, wait till crypto gets super hot, whenever that is, right? Because we know for a fact that Robinhood's business is correlated with a how would I put that? It's correlated with a increased interest in crypto. They said it, right? Q1, Q2 of last year, they saw a massive growth in trading activity on the platform in crypto specifically, right? So if crypto were to get hot again, and I mean hot to the point of like every day it's crypto, then Robinhood's business will follow with that. Otherwise, I would just say wait for it to form a base. That's what I would say about Robinhood. Eventually, it will stop going down. Who can say if that's now or in a week or a month or a few months? But eventually, it will stop going down. Because Robinhood does have a real business. It's not like some of these SPACs. Or I shouldn't just pick on SPACs. It's not like some of these companies out there that IPO'd in the last year or so that don't have like a business or don't have any revenue or revenue 5 years out. Robinhood has revenue. They have a business. So I don't know. It's like most things. Probably have to wait and see at this point. But
how's let's check on Activision Blizzard.
Dude, they're all strong today. ATVI, Take-Two, EA, they're all strong.
I had calls on ATVI. Take-Two, I actually think I like a little bit more in the video game space right now.
Can I have your charger?
Yeah.
Thank you. They're all so strong today, and I don't know why. Not that I care, but thank you. you.
You know what's not strong is solar. So I'm looking at Sunrun right now, open down nearly 10%. So Sunrun's 52-week high
That was an easy one to predict.
is $100. Now it's at $30.
You knew, if you follow the news, you knew that solar would be down today. Solar and EVs would all be down today because of the apparent death of Biden's spending plan, right? So you've got solar, you got EV stocks, all of them, right? Tesla, Go EV, Canoo, Rivian.
Yeah,
whatever.
I wonder if this is a buying opportunity for some of the charging infrastructure plays. Because I mean, just think about it logically. We have, I want to say millions. I honestly don't know off the top of my head. How many gas stations are there in the U.S.?
So what would be your go-to? Oh, QuantumScape would be your go-to, right?
For charging? No, not for a charging network. QuantumScape is more the technology
battery.
behind the actual batteries.
So what would be like what would be your...
No, like Plug Power or ChargePoint.
ChargePoint, that's when I was CHPT. That's what I was thinking of.
So
Okay.
just thinking about it logically, if there are, I just did a quick Google and it's saying there are 150,000 fueling stations across the U.S. That seems small. I would guess we would have had more than that. Anyway, there will need to be some sort of equilibrium between, like once we get enough electronic charging stations to really support EV vehicles. So I think in the next 10, 20, 30 years that these charging stations will be one of the big growth opportunities, both or like in terms of the stock market, which it's hard for me to try to determine now who will be the leader in this space. But definitely there are a few companies right now that are focused on that. And I think what we've seen so far, Spencer, with solar is kind of what we've seen with cannabis is like you can be too early, right? If you're too early, you're sitting on a loss for a very long time before you're back in the green.
You ain't kidding.
So could it be that it's still too early to invest in some of these charging stations? Sure, but do I think in 20 years we'll have a EV charging station on the corner, on every corner, like we have gas stations? 100%.
Yeah, and I think if you're gonna take a flyer on like a high growth EV charging station name, right? Would you rather buy it at all time highs? Or would you rather buy it at all time lows? ChargePoint is at an all time or darn close to an all time low right now. The all time low I think is all time low is 1760. So we're within $1 of the all time low. I'd rather buy it at an all time low, right? If I was taking a flyer on like just taking a shot down field, Hail Mary, if it hits, I'm golden. And if I miss, I miss, knowing that I'll most likely miss. I'd rather buy it at all time low, personally, if it were me. I've got a couple high growth names, and I'm in them from way higher than we are now. You know, Arc. Actually, not Arc. Take that back. SoFi being the big one. Okay, it's 12:56. Let's do a quick crypto update. Okay, this morning when we looked, it was all red. It is not all red now. Terra and XRP have turned green here, so that's something. But as I said this morning, I don't really get alarmed. The eyebrows don't go up unless I see anything down, up or down, more than 10%. And as you can see here, nothing on the heat map is up or down more than 10% today. So I'm not really interested in any of this. But as always, you can get free Bitcoin. All you have to do is go to the Voyager app, download it, use the offer code ZING, Z-I-N-G, fund your account with $100, make your first trade, and they will give you $50 in Bitcoin for free. Check it out.
Yeah, I mean, I think looking at the Bitcoin chart, right, we're in a downtrend. We're in a bear market. If we get down to this $41,000, $42,000 level, which we easily could by the end of the week, and we don't bounce off that level, I think it could be time to sound the alarms. I'd be selling any Bitcoin I had if we can't hold that support level, because if we drop below that 41,000 level, there is certainly a ways to go before the next support level. So I don't know where everyone stands with Bitcoin right now.
Ooh, BITW is my biggest holding, says Easy Mike.
I don't know what that is.
That's the ETF. That's the second one. Isn't it the second one?
BITQ?
Well, there's BITQ and there's BITO and there's BITO. And I don't know what BITW is. What is BITW? What is that, Easy Mike? I don't know. I haven't looked at MSTR in a long time. How is MSTR doing? This is Michael Saylor, right?
Yeah.
Okay. I haven't looked at MicroStrategy in probably months.
Probably not well. Yeah, it's down 23% in the last month.
I've not looked at this chart. Full disclosure. That's actually not as bad as I would have thought.
Well, that's essentially what Bitcoin is down in the last month.
Yeah, you're right. Okay, fair enough. Huh.
Yeah, I just don't know what the benefit. I mean, if we're talking about like gold, there's a benefit for trading some of the gold mining companies compared to gold. Because say if you're in a bull market and you're long gold, you go long through some of the mining companies, you can actually have better return than if you were just buying gold, because you have the company's earnings, revenue, all these other aspects that factor into it that can make the stock price go higher than just what the gold price is. I don't know if the same is true for Bitcoin, or if it kind of just tracks, if it kind of correlates more closely to Bitcoin's actual price.
There are advantages, right, as was mentioned in the chat, right? You can do options. You can do some fun. It's easier to short if you want to do that sort of thing, right? You can do a leverage play. There are also added risks, right? You are subject to the company risk of the company's balance sheet, risk of company's leadership. There's no balance sheet risk with Bitcoin. There is with MicroStrategy. So I don't know. It's one of those things you got to weigh the pros and cons. There are both. But it is 1:00 on a Monday, and after taking a week off, we are joined once again by Jake Wujastyk, the co-founder of TrendSpider. They got all the charts. Jake, what's going on, man?
It is going. Thank you guys for having me on. Quite a market we're in, and just trying to figure out what's kind of going on here. So I was going to say I can share some charts here and kind of try to get an idea of what's going on. But at the end of the day,
please.
You know, we kind of talked about this a little bit during the first week of December. Just kind of the market definitely looking a little weak, Bitcoin looking weak, and then we did get some pretty heavy selling across the broad markets, but more importantly the growth names and just anything that had any type of bleeding during the year. It just was exacerbated into December with tax loss selling, and we just continue to see the markets moving down, even the broad markets, which were really held up by a few names, and as those turned, the market turned with it. So, the one thing that I'm kind of keeping an eye on for the most part on SPY is just the daily chart and looking at the October low. And this is something I do a lot. So I like to look at the volume weighted average price. So if we were just to look at the volume weighted average price without any type of bands on there, we're definitely breaking below this volume weighted average price. Now, the thing that I'm, not a huge fan of using this indicator, at least right now, on SPY, is notice how there's been times where you've broken down through it before. So the price hasn't really respected it that well. So what I've done is I've added a percentage band. So that's essentially adding another VWAP X percent below the original VWAP. And so I did about negative 0.9%, and that's simply to capture other times where the price action has respected this area. So we are actually breaking down through it. Notice that we did break down through it back in early December as well, intraday, and then we moved up pretty hard into the end of the day. But so far we would close below this area, and that would be the first time that we do that since the October low. And, we'll just have to see what happens into the rest of the week. I look at the markets as an equation. If this breaks down, then this is the next level to watch. I'm not really trying to predict the markets. You just need to look at levels and really get an idea. If this breaks down, then we got to look at this. If this breaks to the upside, then maybe there's a gap above. That's the next level to watch. So for me, the main thing on the weekly chart that's a little discouraging is the fact that we finally are breaking down through this ascending wedge here. So you can see here, I didn't start it exactly from the COVID low, because you do have, you have a lot more points on the chart. So when I'm drawing a trend zone or a trend line, I want to find as many points as possible. So 1, 2, 3, and then we kind of have a cluster there, 4, 5, 6, 7, and then we're finally breaking down now, which isn't the best look for the market. Now, you can have overshoots and undershoots, so that's possible. It's only Monday. It is a short week though, with the markets closed on Friday, which actually wasn't aware of. I thought we were going to have a full week. So that was something that I learned over the weekend. And we're kind of going into that Thanksgiving low liquidity week again. You've got, conveniently all this news coming out with variant stuff during a week that's incredibly thought of as a low liquid period. And a lot of people, keep saying Santa Claus rally. A simple Google search will tell you the Santa Claus rally isn't even, technically until after Christmas. So yeah, for those that were expecting a huge Santa Claus rally or calling it that, that generally does not happen until after Christmas into the first couple days of the new year. So for those that are looking for that rally, you wouldn't find it in a different year either, because typically it is towards the end of December into the early parts of January. So for now, not a lot of positive things to talk about. The only thing I would say is Bitcoin's holding, I guess, relatively speaking, to its previous lows from a couple weeks ago. But, even this, we're starting to kind of creep down to the 45s, the 46s, which, were kind of like crazy to think about a couple weeks ago. And now, now people are happy that we're holding 46K, when before that was like, holy crap, we're at 46K. So Bitcoin is starting to break down. If you look at this longer term trend, I've got the log chart on. So if you are looking at Bitcoin on this longer term time frame and you don't have log on, you're not going to see this trend line. I like to use the log scale chart, especially when you've got this big of a range. I mean, if you look from the COVID low to the highs that we saw even here back in November, that's a 1,600% move. If you're not using log scale, your scale is going to be really funky, and you just want to use linear scale when you've got a much smaller price range on the chart. So anything like under 20%, linear scale makes sense. But if you're looking at gains of hundreds or thousands of percent, you definitely want to turn on the log scale, because it will give you a much more proportional chart to the price action.
Does not get mentioned enough. Good call out there, Jake.
Yeah, it's just, one of those things where I get a lot of those questions, and it's a valid question, very valid question, but that's the reason why I use log scale on most of my charts, because most of the charts I'm looking at have a pretty big price range. So Bitcoin breaking down. Remember, we talked about in early December, if Bitcoin's looking weak, I don't have a lot of confidence in the market to be strong, and that's kind of what we've had here. We had the divergence play out. So if you guys remember that monthly chart, we had that divergence playing out where we had the higher highs over the last year and a half or so, or maybe a year and 2 months or so. And then if you guys remember, we pulled up the Williams percent range 12, and we had that divergence. So these higher highs one time, so higher high in November, start in November, higher high in February of 2021. That's your first divergence. Second divergence is your high in February connected to the high in October of 2021. This was the highest close. That's why I'm connecting it here, even though we had a higher high in November. And you'll see this is the second part of that double negative divergence. So you've got 2 times where we're hitting higher highs, 2 times where we're hitting lower highs. And at least for now, we're not anywhere near oversold on the Williams percent range 12. I'm using 12 because we're on the monthly chart and I want to look back 1 year. But it's one of those times where it's like, it may be time to just call it for the year and enjoy the holiday, because there's going to be a lot of craziness this week. Joe Biden's coming out with some speech. Who knows what that's going to be about tomorrow? The way to kind of look at this in a contrarian way is essentially thinking, okay, well, the markets have definitely pulled back due to the Fed mentioning tapering and mentioning interest rate hikes. And notice what they did. They pretty much said they were going to raise interest rates 3 times in 2022 and then up to 3 times in 2023. They don't even know what they're going to do next month. So these numbers are essentially cushioned for them. So then next year, when who knows, the economy could be really bad because of whatever variant comes again, or that's an excuse to close down the economy. That increases the likelihood of them probably not being as aggressive on tapering in interest rates. But since they put it out there, now they can take it back. They're actually kind of strategically, I think, doing this, because now, even if they raise once, the market's already essentially priced in 3 times next year and this tapering. So it's going to give the market a little bit of flexibility there if they do decide to pull back on this. I think tomorrow's a big speech, because if they say they're going to lock down the economy again, which at least where I live, I can't see that happening, or some other, places like Texas and Florida, I don't think anyone's going to follow it. You don't even have people following it in Denver. So, I think the speech tomorrow is what the market's waiting on, and the fact that it's already a low liquidity week and the uncertainty into tomorrow is causing the markets to sell off. But Bitcoin is actually holding above 46K. I thought with the market crashing, Bitcoin would probably be at 44 or less today. So that's something to keep in mind on the bullish side of things. But it's really hard to have too much of a bias either way right now, because it's just so choppy.
Yeah, I'm with you. I'm with you on that, Jake. And we could debate all we want about, like, a lockdown and will it happen, and if it does, would people follow? But frankly, I kind of think the market is looking past all of that. You know what I mean? I kind of feel like, first off, I was in the camp of like, oh, this is all the Fed. This is nothing. This is not Omicron. This is all the Fed. Well, now we're past the Fed, and we're into a period of lower volume, like you said, and it seems like the theme of the day is Omicron. But I don't know. I kind of still feel like the market is just not. I don't know. I can't see this being like a long-term theme. You know what I mean?
Yeah, for sure. And I think it's definitely shorter term. But I think the problem is I don't know if I mentioned this before. I mentioned on a couple of Twitter spaces, but you've got this weird paradigm of selling for profits and for tax loss selling. So imagine that you have not touched your any position this year. Towards the end of the year, this is when you start looking at netting out your account. You're looking at, okay, do I take gains here and I take my losses here? So if you've got these stocks with huge gains this year, you're going to see people start selling those to take the profits, to lock those profits in, to offset the losses that they're taking in all these growth names. So you actually have this double-edged sword where you have selling in the strong names this year, so people realize those gains, but then you also have selling in the growth names, and these names have gotten smacked down the whole year and continue to get smacked down because people want to realize those losses and offset them. So it's kind of this double whammy here, where you've got not only selling from tax loss selling, but selling to realize those gains so you can offset those losses with realized gains into the end of the year. And that doesn't end for a few more trading days or several more trading days. So we could just see this tax loss selling and kind of tax gain realizing into next week.
Yeah, that's a really. I've been wondering like what the turn of the calendar is going to mean when all that. You won't be able to hide behind tax loss selling anymore, and I've been wondering if there will be a rally once we get past it, and it turns out, oh yeah, that actually was a thing. It turns out people were just selling all their losers for taxes, or we just keep on being weak, and turns out it was not tax loss selling. That was just an excuse. So I don't know. We'll find out in a couple of weeks.
We will. And I mean, Ethereum, it looks incredibly weak right now. That's why I'm very cautious in the market right now, and just having to take losses. I've gotten chopped up a little bit, but thankfully have kept a majority of the gains for the year because I kind of sized in a lot smaller than I was when I was going really aggressive earlier in the year. So that's kind of saved some of the profits for the year for me. But, a lot of people have just been playing the game like it's been played the last 18 months. And I always go back to blackjack. If you're playing blackjack and you're in the table's really hot, you're winning on every hand, regardless of what the dealer's flipping, then, that's great. You're playing the game right. But then if the table switches and the table becomes cold and you're still playing that same strategy, you're going to lose all of your gains. It's the same thing. If the market's hot, your strategy works great. If the market cools off and you're still playing the same position size, you're still playing the same stop losses and all of these things, you're just going to lose everything that you gained because you're not adapting with the market and it being hot or cold. So I think a lot of people have gotten hit pretty hard this year because of that. And on top of that, crypto has been holding up a lot of people's gains for the year. And if that starts to tank, then that's really going to be interesting. I mean, Ethereum is what a lot of people look at, sometimes even over Bitcoin, and Ethereum looks horrible right now. I mean, this looks like a month ago for Bitcoin. You've got this first initial candle, you've got this starting to tick down right now on the Williams percent range. I mean, I could see Ethereum getting down to at least 3,500, and if that breaks, I could probably see it getting down to this VWAP in the 25 to even less area. So, I mean, I don't have crypto. I don't short it. I use it as a risk on, risk off indicator and a proxy in the market. So
Sure.
I don't really care where it goes, but just an unbiased eye looking at the chart, we have a lot of profits that people have that they could start selling off and make this really ugly.
All right. Jake, let's move away from crypto for a second and let's go into some stocks here. Any stocks that are on your radar in this quiet week or not really?
Not really. I mean, I'm kind of taking the week off. The one thing I would mention is IWM is breaking down through some pretty crucial levels. So, I mean, if people are interested in, shorting, this would probably be where a lot of people start shorting, because if you look at just these previous levels of support, it depends on where you draw the line, but we're getting pretty close to hitting support here. So for longs, if this holds, then maybe it could be a long. But I think a lot of people are forgetting, especially if you're trading options, you have to look at the VIX, because the VIX going up 20%, 25%, and then you go look and see, oh, well, my IWM calls are down from where they were an hour ago at a higher spot price. You have to look at the VIX. The VIX is really affecting the options pricing. So you could even buy this dip, but then you look at the VIX, it's up 20%. So if the market rips tomorrow and the VIX tanks 15%, your contracts may not move depending on what expiration and what strike you have. So that's something to keep in mind. Just for those that don't pay attention to the VIX, you definitely should if you're trading options. But yeah, IWM is one I'm keeping my eye on. I mean, this has been an area that has had bounces in the past, but the question is this too obvious? Are too many people looking at this and it just gets blown right through? We'll have to see, but that's something I'm keeping an eye on. I'm actually keeping more of an eye on the indices, because you're not going to have as much kind of localized supply and demand issues. What if you're in a stock that has a really big shareholder or someone that's got a big position who just keeps dumping shares on the market to take their tax loss sale? It doesn't matter what the market's doing. If that individual or that institution is making the market because they keep just dumping shares to get this tax loss locked in, then you're going to have essentially, an issue with that individual name. So I'm actually looking at more of the indices right now, because you don't have as much of that kind of that localized selling.
So I want to know you got the Russell up right now. That to me is everything. So I want to know your take on the Russell, because this is the market.
Yep. Yeah. For now, it seems to be. So right now, I would definitely pull up the weekly chart and show that,
no!
you know, kind of like what we just talked about on SPY, we're breaking down through this area. Now, I have a little bit of a slanted line here just to lock in, because when I draw a zone, I want to have as many data points on there. It just makes that zone more important and more relevant. So, this thing's been touched so many times, and the fact that we're breaking down through it, you could pull out the horizontal levels and say, well, technically, we're not below this previous area here yet. So people who use horizontal levels, which a lot of people do for price action, this could move down to the up, the lower 200s and still be holding the pattern for horizontal traders. But for me, we're breaking down through a pretty important area right here. And I don't know. This is definitely a time in the market where it is incredibly hard to even get an idea or anything of what's going on. You just have a lot of these weird variables in play. You've got the stimulus or Build Back Better America or whatever it's called. That's being, tossed out or being talked about. Who is it? Munchin or whoever,
Manchin.
whoever, Manchin,
Yeah.
Munchin. I can't keep track.
They're all the same to me too. Don't worry, Jake.
Yeah. So this guy's pulling out. So not only do you have all of that liquidity that the market was thinking that was going to be there from all this stimulus gone, Omicron, possibly lockdowns. You just have this really weird kind of perfect storm right now. So I'm definitely not going to be aggressive until, an edge presents itself. I've chopped up some of the year's profits in one account. The other account has held decently well just because I wanted to be pretty conservative. But, if you think you're out there, and this is something I think is good for a psychology side of things, don't think that you're alone in losing. Some people say, oh, I played puts, whatever. Look at the average person over the last 6 weeks. I guarantee that 90% or more are having a really tough time on top of, maybe a few people who played the puts correctly. So, just don't beat yourself up if it's been a rough few weeks. I can promise it's been a very rough time for a lot of people in the market right now. And that's just the market we're in. And, sometimes you just got to know when to pull back, lower your position sizes and just let the market do its thing before having too much conviction.
And that's why I asked about the Russell, because that to me is the indicator, because the Russell is so diversified and made up of so many stocks that the Russell is not going to rally on the back of 5 stocks. It just isn't. Even like AMC is the largest holding in the Russell, and AMC is like 1.4%, right? So it ain't going to rally off AMC either if AMC goes to the moon. So the Russell is your indicator for all these stocks, all these beaten down stocks, and if that's going to break through support, then that's not a good sign for bulls. We'll leave it at that.
And AMC, AMC had a little pop today. It's so funny to me when they come out with these statistics. They're like, oh, highest sales since this, but they don't tell you that ticket costs are twice as much as they were when they took that last record. So inflation is definitely a big problem, and I think it's become such a big problem where the Fed is tied up, where they're like, yeah, we want to support the market, but if we keep doing that, inflation's going to get to the point where it's, going to cause even more massive problems than it already is. So yeah, I mean, AMC, you had your meme stock rip on this one on Friday, still in this kind of downward sloping channel, but Spotify was one that I'm kind of looking at. It's kind of holding these higher lows. I have this one as a longer term investment rather than a trade. I actually cut GRWG for a tax loss event. So at least I know that I participated in that a little bit. It made more sense to me to take the loss and look at it in 30 days and offset some gains than try to be a hero there. So Spotify is kind of my longer term one I like right now. But even this one, it's hard to say. You can't really look at the weekly candle right now because it's Monday and not even half the day barely has gone by. But I just don't like when you open in a previous wick. That is kind of like a no-no for me. So the fact that it's doing that kind of invalidated even that decently strong setup into this week. So, a lot of these setups are looking like more medium term, couple week out shorts than long. So I prefer to just go cash and wait for a long setup and really have conviction than try to like flip flop between strategies. But for those that do play puts, this is definitely the market for the put players right now.
All right, we got a few minutes left with Jake. Drop your tickers in the chat. We'll have Jake take a look. P-Lit. Okay, I see you, P-Lit. He wants you to talk about Tesla.
Yeah, let's do it. A lot of people are watching this one. So I have Tesla on the weekly, and then we'll go on the daily. But for me, it's kind of interesting. I posted something this weekend, kind of X marks the spot. And that was simply just to highlight, you've got this previous horizontal level here from January early in this year. And then you can see that we broke out, and that was kind of your main breakout area in late October, early November. And now we're pulling right back to this area. But on top of that, we also have this diagonal zone here that's kind of meeting right in the middle. So it wouldn't shock me to, and Elon Musk right now is doing his thing. So that's kind of what that localized selling. I mean, if Elon Musk is selling, he's adding supply onto the market. If a big player in another stock is just dumping, it doesn't matter what the charts are doing. If they're the main source of supply that's outpacing demand, you're just going to keep getting selling pressure. And so that's what's happened with Tesla big time. That's kind of killed the sentiment for probably people who want to buy the dip on Tesla because they're like, well, I don't want to be buying Elon Musk's shares. So, I could see this going down to
why not? They're lucky. They're lucky shares.
Yeah, we'll call it that. So from just a confluence point,
yeah,
it would make sense for maybe a bounce within $50. Maybe it gets down to the gap below. So that's when we'll pull in the daily chart, and you'll see we still have this gap below from when this thing really started going, and that's in the 840s. So it's really hard for me to think that we're just going to continue to move straight down because you generally want to have some type of little pop so shorts can cover and then reshort. But we're in a market where you don't necessarily get those pops to get out. You just kind of continue to move down. So we filled the earnings gap Friday, and then we're starting to break down through that point. So it would make sense for me for this to move to the 850s, 840s to fill that gap before I even reevaluate it. So yeah, I mean, I don't really play Tesla. I don't play the options because I don't like playing short-term options, and I don't like playing 2 to 3 month out options because they're like 10 grand a piece sometimes. So I'd rather not do that because I like to scale in and scale out. But this is one I like to also keep an eye on just for sentiment. Tesla's been a pretty good indicator of market strength and market weakness. So it's another one I kind of use like Bitcoin as a proxy sometimes to get an overall idea of what the market's kind of looking like. But
all right, we got a lot of tickers here and not a lot of time to do them, so we're going to have to go quick, Jake. We talked about that one already. Let's do, SoFi for Jim Cruz.
SoFi. Yeah, this one's actually holding pretty well. I mean, if you're looking at the longer term or I don't even want to call this longer term because it's only since December of 2020, about a year. But if you want to call it the primary trend, is broken. So maybe do we get a pop up to the 15s, which is this previous zone? So previous support maybe acting as resistance. Maybe I think they had an upgrade today or maybe someone initiated a buy for like $20 price target. I don't remember who it was, but this is not a market that's really going to react to that type of thing right now. The market's weak. You're not going to really have that spike like you usually would if the market was strong and everyone piled into this with the new price target. But yeah, this one's tough. I mean, you're breaking down. Not really one that would be on my radar here. You can see that it doesn't really like to respect these zones either. So I had a symmetrical triangle that we tried to break out of. You had this whipsaw effect. You broke out, pulled all the way back down. Now you're kind of the exact same area on the opposite side of the symmetrical triangle. So for me, it's a dead one for now.
Okay. T Searing D holds a lot of shares of BNGO, Jake.
BNGO?
Any thoughts on BNGO was his name?
Oh. Yeah, I'm not familiar at all with this company. I mean, but just looking at the chart, this is not something that I would, go long. I mean, if you turn on the gap detection here, you have a lot of gaps below still. You've got a gap here at 75 cents. You've got a gap here at 150. You've got the gap here at 350 that just filled a week and a half ago. So I don't know what the market cap is. I have no idea what this stock does. So I don't know, is dilution, did it happen already? Are they, is the market maybe thinking they're going to dilute? Biotechs, or I guess this is genomics, but anything in that industry is really hard, especially after you've had this big of a move up. This is the price point where these companies will take advantage of an offering, because it's still up from, the beginning of this year. Let's see. I guess maybe it's, okay. So it's down for the year now. So I guess it's down like, holy moly. It's down 56%, even though I thought that was gonna be like 5%. And this is a great time to look at log scale versus linear, right? So if you turn off the log scale, this looks a lot different, because each dollar is the same amount on the y-axis. Whereas if you turn it on log scale, it's a function of actually percentages. So, a $1 move in the next 2 days or whatever is not going to be the same as a dollar move down here when it was trading at 51 cents. So just an example of when you want to use log scale. This would definitely be one you want to use log scale on, but not looking incredibly strong to me.
Okay, let's do one more real quick, Jake, and we'll do, what was the one that I wanted to do? Affirm. Sweatband TV's got puts in Affirm. All right, Sweatband.
I don't blame them. What isn't Affirm like buy now, pay later? Like, didn't we learn that didn't work too well in 2007 to 2009?
Look, I thought that, like, when I first heard about Affirm, I was like, wait a minute, isn't this just Rent-A-Center, but for other stuff and not furniture? And that's not a great model, I thought. But I don't know, man.
Everyone loved it about a month ago, and now not so much. Another one that I think is probably just going to continue to get sold off, because I think you've got people that are still, that bought down here in the May, June area, July, that had a lot of profit, probably selling it off to offset losses elsewhere. And if I were to guess, this trend zone below is not until you get to the 70s. So I don't know. It's not holding horribly today, but you do have this gap below around 69. We technically filled this gap Friday and Thursday. So this gap is kind of closed now. So yeah, we'll have to see. And if you guys do want to like extend these gaps, if we do this like a 5, gap factor 5, we'll probably just show this one. Yeah. So if you guys are using the gap snake on TrendSpider and you want to know when this gets filled, sometimes you'll have that weird connection where it's connecting the other ones. But if you want like a bigger gap like this to extend all the way to the right, just choose a larger gap factor. So it's only looking for the huge gaps in price. So I forgot who you mentioned has puts right now, but if you had puts and you want to be alerted when the gap starts to fill, you've got the alert here whenever the price starts to enter this area, and you'll know it's starting to enter that gap. But also not one that looks great. Sorry to be negative.
No, that's okay, man. All you can do is give us your take. Jake Wujastyk is the co-founder of TrendSpider. I had the offer code up on the screen for like 20 minutes there. I'll put it up again. BZ25. Get you 25% off. Jake, I'll be out next week. So if I don't talk to you, Merry Christmas. Happy New Year. We'll see you again,
my friend,
in the new year. All right.
Hey, we both had a big year this year. So
we did indeed.
A lot to be thankful for. So have a great holiday as well. And
all right.
We'll see you.
Same to you. Have a good one, Jake. Hey, real fast, before we bring on our next guest, I want to tell you about today's sponsor. Yes, I'm talking about Nightscope. Nightscope's fully autonomous security robots have generated over $13 million in lifetime sales and 1 million hours of field operation. Nightscope recently announced the commencement of their Reg A Plus offering. They have over 28,000 investors and over $100 million already raised. Nightscope is reimagining public safety at a time when the nation needs it. To learn more about Nightscope's offering, go to the link that's in the chat and on the screen. It's startengine.com/Nightscope. I'll put it up on the screen right there so y'all can actually see what I'm talking about. I think I have it. Should have. There it is. Startengine.com/Nightscope, or click on the link in the chat. Click on the link in the description. Check it out. And now it is 1:33. We are running late, but that's okay. I see our next guest. AB, who do we got?
We've got Chris Capre, our man from Second Skies Trading. We're going to be talking some options and some more technicals. So without further ado, let's go ahead and bring Chris on.
Who's bringing Chris? Am I bringing Chris on?
I guess I can.
Oh, I didn't know you didn't. Okay, there he is.
How's it going?
What's up?
I was just hanging there for a second. I was like,
Yeah, I know.
You got stuck in the metaverse.
I didn't.
oh, okay. Zuckerberg heard me talking down about his metaverse, so he probably delayed that pop on there. So I get it.
Yeah. Well, once we get the metaverse more figured out, we'll have some more seamless intros. Chris, how you doing? How's your weekend?
Not bad. I'm moving my girlfriend in, so it's just kind of been a busy, crazy weekend. But other than that, things are good.
Oh, that's exciting.
Mm-hmm. Yeah. Still got lots to unpack and things like that, so kind of going through that. So this will be my last Benzinga show of the year, so I'm looking forward to kind of ending this one off strong. It's a unique day in the markets right now, and I think it's kind of setting things up for a very tricky rest of the year.
Yeah, unique day to say the least. I mean, we pretty much opened all red across the board, and we've had a few names show a little bit of strength throughout the day, but not really. So let me go ahead and pull your screen up, see what we're looking at, and see what's kind of just on your radar right now.
So real briefly, I just want to cover what's going on with the overall market, SPYs and VIX. Then when I want to get into IWMs, I want to look at a firm, which you were talking about earlier, Ford and Apple as well. And if we have time for Tesla, we'll cover that. So, all right, so here's the deal in breaking down the options landscape and kind of the positioning that's going on. So we had a lot of positive gamma last week in SPYs, but we had 30% of the SPX options roll off this December OPEX that just happened last Friday. So that took a lot of options off the table. And we've now entered into negative gamma. We opened in negative gamma to start the week, which is not a good sign. Positive gamma means the market's a net long options. That means that, the markets tend to be supported. Dealers are providing, liquidity and stability. They're buying dips and they're selling rips, which creates that kind of supportive environment. But a negative gamma environment means the market's a net short options, and option dealers tend to destabilize the markets. They start trading with it, and that increases volatility. So as we sell off, they sell. As we buy up, they buy up, and that increases that two-way volatility. We've opened in negative gamma right off the bat. And we've also, and that was really, gamma really started to shift around 459.5. So that's where the market flips to kind of a net negative gamma environment. And we're just sitting there. We have not had any liftoff whatsoever. We are not, as of right now, seeing traders commit to calls at or above 4,600. And that means that traders aren't really bullish right now. If they were, they'd be buying calls above the current price and further out. And we're just not seeing that right now. We're not seeing calls really come in droves. And so that is creating some weakness. So SPY is kind of in the situation now where it's in negative gamma as long as it's below 460 roughly, 460 and a quarter. And let me get my pen out here to kind of demonstrate this a little further. But come on, Ben. There we go. This is really going to be, as long as we remain in negative gamma, 460 is resistance, and 450.05 down to like 449.50. That's really going to be the support for right now. Now, liquidity is obviously coming out of the markets as the week goes on. So, in some sense, that is helpful and hurtful. It's helpful that a lot of people aren't going to be necessarily coming in and selling, which would exacerbate the downside, but it's also hurtful because it doesn't provide that supporting liquidity. So I think traders need to be watching these levels very seriously. If we get a daily close below this, that opens up a whole new can of worms to the downside. Traders need to be watching SPYs to make sure that it recovers 460 this week if they want any chance of an end of year rally. So until that happens, we're going to be stuck in this 460, 450 range for right now. With that being said, we have to look at VIX. You cannot look at SPYs without looking at VIX. VIX opened up, but it's also been kind of holding at the top. Now, this is where things could actually get interesting. If VIX starts to break down and close this gap down to 22s, then that means that traders haven't really committed to buying long puts. In other words, they haven't committed to buying downside protection. And that should create, actually, if VIX does that and starts to sell off, that actually should create a lift in SPYs and may get us back over the 460 hump, which is what we want. So what traders want to see is this VIX continue to break down, get into the 22s. If VIX was ripping, we'd be worried about, the Vanna trade working against us. Vanna is delta. It's the rate of change of delta as implied volatility changes. And so if VIX is ripping up, that obviously changes deltas and hedging impacts for dealers. If it's going down, it has the other effect of that. So it's obviously changing impact for dealers, implied volatility coming down. We're not seeing that, which is a good sign so far. If VIX started ripping 27, 28, 29, that means traders are buying put protection. SPYs would be pressing those 450s very, very quickly. So we're not seeing that, and VIX is starting to break down, which means that there isn't quite a fear trade on yet. And if it continues to break down, that should give SPYs the lift because we're not seeing those long puts and push the market down or anything like that. So far, what I'm seeing now in VIX has been constructive and helpful. We still needed to get back down here to really stabilize SPYs a little bit. But so far, VIX breaking down is helpful. Again, gets back down to 22s, close the gap, 21s and 20s. Then you should see SPYs lift probably back up to close to that 460. And so really we should be watching these two to see what's going on. And look right now, as you can see, as VIX is rolling over, what do you see SPYs doing? Getting a little lift.
Yeah,
let's go
and
as we speak.
QQQ right now, as we speak, QQQ's gotten a nice little bounce too. It looks like all the major FANG stocks have moved up a little bit in the past 10, 15 minutes or so.
Yes. And so, keep your eyes on VIX. If VIX continues to sell off, then that will relieve the pressure. The challenging environment for SPYs right now is that, puts have more of an impact upon in a negative gamma environment. So like in negative gamma environment, it's important to understand that news and fundamental events, they matter more when we're in a negative gamma environment. In a positive gamma environment, news events get absorbed much more easily. But in a negative gamma environment, they exacerbate the flows. And so the Omicron variant didn't help. The Build Back Better obviously didn't help. It seems like the market is trying to digest that. And they're trying to see, hey, are people buying more put protection, which will push this markets down? So far, that hasn't fully materialized. So as long as VIX keeps lowering down, which is really nice to see right now, then that should give it a little bit of a boost. It's a question of how much. Can we get it back up to the 460? If we get it back up to 460, and then we see option traders start to buy calls 460, 462, 465, then that would suggest that the markets are saying, okay, we're done worrying about this kind of Omicron, Build Back Better flop thing, going on. We're ready to get bullish on SPYs and then push it towards the end of the year. But if we don't see them committing to those calls, then we're going to be stuck in that 460, 450 range. Because then there's just not enough gamma and positioning right now to really push the markets either way. And it's just going to really be driven by these kind of short-term flows in SPYs and VIX.
Yeah, I mean, so I don't know if there's any like singular catalyst for why right now we'd be seeing like a little bounce in SPY or in QQQ or the VIX rolling over, or if it's just like you said, like people saying, hey, maybe this Omicron, Build Back Better, all those things maybe aren't as big of a deal as we thought.
Yeah, and so, I mean, keep in mind, I think everything right now is going to be a little exacerbated because of the low liquidity. I think things are going to be a little bit more sensitive over the next few days. I'm not committing to any heavy positions. Like at this point, I'm kind of like I told my students that I'm like, look, unless I see a like super A+ cherry trade or something like that, I just don't have any interest in committing capital right now to anything. So, I'm looking at it as like I'm kind of done for the year. At this point, I don't want to be trading up till Christmas or after Christmas in poor liquidity conditions, and so I just kind of let this play itself out. If you're really worried about it, like let's say you have a long SPY position or you have a long stock position and you're worried that things can deteriorate, you can always sell calls to buy put protection, to finance your put protection. So you sell calls further up and you use that to buy some put protection. And if the market does sell off, those puts will be monetized. Your calls will make money. You'll keep your premium for your calls. Your puts can be monetized, and that helps, adjust some of your downside risk. But other than that, I'm not seeing anything that's really jumping out to me as a really strong ticker. With that being said, I do want to go over a few charts if you're down for that.
Let's do it.
Okay, you're talking about IWMs. IWMs is in this very interesting situation. So where we are right now, 210, and the low end day was 209. Okay. So IWMs has a little bit of rate of change in the gamma to where if we get into like say 204, 205, then the gamma actually increases to such a degree that dealers actually might start buying a little bit, or at least unwinding their short hedges. However, if we see IWMs get to like 203, 201, then it really would probably put an accelerator on the selling, because then dealers actually flip their hedging requirements to start selling IWMs. So when I look at IWMs, it's in this kind of fragile situation. If it loses like this right around here, if it loses 204, which is just below this little weekly lows here, then we could have a pretty quick run down to 190, which is really the next base of support. And so you see that right there. Resistance here, support, support, support. And it's also where this pullback launched and created this leg up here. So this is really key. It kind of is getting towards the Alamo for IWMs, that if it keeps drifting lower and loses 204, you should see 200 quick. And if it loses 200, then you should see 190 pretty quick before, hedging requirements force dealers to unwind some of their short positions or short hedges on that. So, it had 1 week of, yay, we're in a new highs, and then it just immediately sold back off. And investors really did not come in with any force saying, we want to buy it, we want to buy it, we want to buy it. They just did. They tried here, and it's already lower on that. So we're eating through a lot of this support here. We're eating through the bids there, but there isn't much left. And so IWM's in a very precarious position. It is a wide range of stocks, but if you look at a lot of the holdings in there, a lot of them weren't profitable companies. A lot of them lost money on the year. So I think people are saying, like, look, this is not a great trade right now. I wouldn't want to be long small caps as a whole. There may be a few individual tickers that are great, for a day or two, like SOPA was today or something like that. But by and large, small caps are not holding their weight really well. SPYs are still close to the all-time highs. Qs is only a little bit below that. IWMs is way back where it was back in February. It's at the February lows. So it's the weakest of them right now. And so traders should be cautious on this. Moving on to Affirm. Somebody had asked about Affirm. I've been watching Affirm. So the key you have to be watching on Affirm is this channel. And so during the Benzinga Option School webinar we did recently, somebody asked me about Affirm. I said, look, trade the channel for now. But what we're seeing is something a little bit different. Every time we've gotten to the edges of this channel, it's been a pretty quick turnaround. This is a 4-hour chart. So you're talking 2 to 4 candles that hung there, and that's it. And that's pretty much it. But now we're seeing it hang at this level for 1 session, 2 sessions, and now 3 sessions. And that means it's just not getting the buy-ups that it's wanted. And when I look at the option positioning on Affirm, I look at it like now resistance has actually come down from, say, the 110s to now about 100 area. So I think that trader was looking for long puts. And so when I look at that, I think that's a great idea to be long puts. Earliest I would be looking to get long puts is between 100 and 101. And so I think that's a great area to be looking at long puts. Let's see here. Okay. Moving on to the next one, Ford. Ford has been a great stock this year. Do I want to be buying Ford at these levels? No, but I do want to be buying it lower around 17. I think Ford is a really good long-term play. I'm probably going to take some leaps on Ford if we can get back to this low 17 area. It had a great burst, but then immediately selling after that, and it wasn't able to hold the gains outside the range. That means it overshot. You're going to have some short-term traders that are going to try and hold the line, but a lot of medium-term traders are going to see that fake out and be like, yeah, it wasn't able to hold the gains. I'm out. And so I look at Ford, and I feel like it could roll back down to about 17, maybe 16 before the dealer hedging requirements are kind of in a situation where they actually need to start unwinding their short hedges and start buying Ford. So for me, Ford is a buy between 16.22 and about 17.40. And so for medium term, long term, it's great. If we hold there and the market's not selling off drastically, then I think that's also a good short term play in there as well. And then the last one I'm looking at, Apple. So Apple, while 170 is okay, I really like it a lot better at 160. And I think at 160, it becomes a good medium-term buy. So 160 is right about here. And let me mark this on the 4-hour chart so we can take a look at this. And you can kind of see what I'm looking at. So do you see how there's all this price action and liquidity around this 160 area?
Yep.
There's going to be a lot of options at that price. There's going to be a lot of open interest at that price. You know, short term, medium term, and long term. And so I think it maybe has a shot at regaining 170 and holding it. But if the markets start to sell off, then this thing will find its way down to 160. And I think at 160, if you look at the meat at 170, there's this price action, there's this. That's it. But you look at this is a lot more meat, which means that it's going to have a lot more options contracts and a lot more open interest in this 160 zone. And so for me, from a medium term, from a long-term perspective, I really like getting long at 160. I kind of hope Apple does sell off a little bit. And then I want it to get down that 160 because I think at 160, it's a fantastic price, medium, long-term. Maybe there's some short-term, day trades off of that or bounce off 160 or something like that. But from a, 1 month out, 3 month out perspective, or even an entire year out, if you were to ask me, does Apple close above 160 next year? I would say it's a high probability that it does. So I'm really hoping for this to pull down here and get into this 160. And at that point, I'm going to start getting long.
And you say you were getting long with like some monthlies or leaps?
I would probably start with monthlies. Maybe,
Okay.
I'd probably start with some monthlies. I would probably do a buy right strategy. So get long shares, sell premium on this. But I would also probably throw in some options, maybe quarterlies, maybe yearlies or something like that as well. I think Apple is in a really good position going forward. If we don't get broad market weakness, if the market doesn't sell off the rest of this, month and then start off selling next month and things like that, like if the market stabilizes, then I think Apple is one of the more favorable stocks out there. It's still close to its all-time highs. It's showing the least amount of weakness and the most amount of strength, in comparison to other stocks that are up right now. It's like one of the stalwarts that's still performing well in a market that's been selling off for a couple weeks now. And that tells me that it's stronger than the rest right now. And so I think they're just in a really good position going forward. So if we get to that 160, I'll be taking, probably a series of plays on Apple that will be short, medium, and long term.
Got it. And then I think we may have a couple tickers from the chat. Throw some out there. We'll take a look at the option chain. One that we saw earlier we were talking about is Netflix.
Yeah, let's take a look.
So this is
Okay.
one that I thought was interesting because at one point today, Netflix was actually up about 2.5%, which was, way outperforming the other FANG stocks. But it's since kind of given up a lot of those gains.
Okay. All right, let me just short term, I think Netflix has resistance right now. So what it did, spiked up to 600 and sold off. Yeah, that's kind of where I'm seeing a little bit of resistance on the options front. So yeah, and you notice on the 5-minute, while it was aggressively bought up, it just couldn't maintain those gains and V-shaped down. And that's, V-shapes are not as common as, more of like multiple touches, second attempt, third attempt, fail, and then sell off. So that tells me that it could be a liquidity issue. I don't know what the shares is on the day. Shares is decent. It's almost at its 10-day average. It just overshot. It probably ran into dealer hedging requirements. Dealers then sold and smacked it back down because this is a decent force on the way down. And so it's unlikely that individual investors were doing that. It's probably more like dealers were coming in selling this back down. I think there's resistance at 600 on the short term. You can kind of see on the 1-hour chart where this really lines up. So you can definitely see there's definitely some resistance there. Spike high past that. Now, where could I see Netflix starting to get some support looking at options? It starts to get really good between 565 and 550. And then the lower it gets, the harder it's going to have the harder time it's going to have going lower, because then it's the dealers are trading against the market. And so let's look at that kind of 565. Yeah, this makes sense. Okay, so here's 565. And then what did I say, down to about 525 roughly, which is right around here. So look at all this. Look at all these flows inside here. That's a lot of time. July, August, September, October, November, a lot of price section. That's going to attract a lot of open interest on the option side from these medium and long-term option players who are going to be bullish on Netflix for a foreseeable time. And so the lower it goes, I was saying the harder it gets for it to kind of, make through there. I think once you start getting in this 570 to 560 range, anything between that and 525 starts to become really good. There's just going to be a lot of open interest there. There's going to be a lot of orders that are going to hold the line there. There's going to be a lot of players that are going to be buying those dips. From a medium long-term perspective, I like Netflix in this zone. I don't want to be buying right now, but as soon as we start getting in that 570s, 560s, then it becomes really attractive to me. So I like Netflix, not at current prices, but very, very soon. Very, very soon.
Got it. And then I see in the chat too, people talking about Boeing. Do we want to check in on Boeing real quick?
Haven't checked in with Boeing in a little bit. Let's do that. Okay. So Boeing prior to today, I haven't looked at today's options. Roughly 780,000 calls and roughly 627,000 puts. We don't have to worry about any short-term expiries. Which kind of makes sense. Smart option traders really aren't positioning for next week, week after, and things like that. So the biggest option expiry coming up in terms of gamma positioning is the January monthly OPEX, which is the 21st. So we don't have any short-term that we have to worry about. But Boeing, to me, at least for right now, looks like a sell. I'd want to be selling pullbacks, not breakouts. Breakouts really on the downside. I mean, it's been continually tracking lower since March this year. Lower high, lower low, lower high, consolidates, lower highs, lower lows. So yeah, we want to be selling Boeing right now. We want to be selling. Where? Right at the monthly VWAP is a really nice, technical lineup. You have the monthly VWAP, you have 200. That's, that should act as resistance. Yeah, I would take a pullback to the monthly VWAP and 200 as an opportunity to sell. Long puts would be fine. Because it's not super volatile to the downside, you may want to consider a bear put spread instead of just long puts. Because if you're just long puts, you're also long volatility. It means you want volatility to expand to continue to help that gamma position work for you. But if the volatility is not expanding, you're going to eat a lot of theta. So to avoid some of that theta decay, you can get long puts right around 200 or just below that. So you get long the puts here, and then you can sell some puts lower, and that will offset some of the theta decay, and then will also offset some of the volatility gains. So then you really don't have to worry about volatility too much. You're really just worrying about direction and can you get to your lower strike by the time this closes. I wouldn't, if I was going to be trading Boeing right now, let's say Boeing does pop back up to 198 today, and it does it correctively or whatever, and it looks good for a sell. I would not do short-term options on this. I would do the January OPEX. So that's the 21st. We're just not seeing the short-term options really come in, so you're not going to get those quick flows. And the largest expiry is that January OPEX right now. So that's where all the flows are positioning. That will create a lot of movement as we get closer to that OPEX. And so I like that one right now. But selling close to 200. Downside, I think 190 is a good target. And if we lose 190, I think we have room to go down to 180.
Yeah, and
You
this
know,
is one of those names too that if we get more headlines about, Omicron and the new COVID variant, that could also increase volatility and make VIX go up. As a result, Boeing could move down lower too. So I don't know. I mean, it's hard to say because we could get news saying, everyone's good to travel again in 2 weeks, and demand for Boeing planes goes back up. This is one that I think is like so dependent on the news that we get over the next couple weeks.
well, let's take a look at that thesis there. You mentioned how many times have we had that, hey, COVID cases aren't so bad, over the last 6-7 months. We've had a few of them, but Boeing continues to track lower, which means that, yes, you may get a 2-week pop or something like that, or a 3 or 4 week pop, but it's not holding the gains. It's continually tracking lower since March this year. And so with that being said, that's why I don't recommend being long volatility, long gamma, only like long puts, because you're going to eat a lot of theta decay because it is going to seesaw back and forth. And so for something like that, then you definitely want to sell spreads, or you want to be getting long puts, but then you want to be selling a certain amount of puts later on. So this way you are not eating a bunch of theta and you're not eating those volatility, the low volatility in this here. So
Got it.
yeah,
Yeah,
that's what I'm looking at on that.
That makes a lot of sense. And then I think we've got time for one more if we run through it in video.
Don't we
from
also
Lisa
have an
Lee.
announcement, a Benzinga announcement?
What'd you say?
Don't we have a Benzinga announcement as well, an important one to do with options? I think it's in the StreamYard as well.
Dude, the options trading school.
Yes.
Options trading school. Check out the link. I don't have my computer on with me right now. If I did, I would paste the link in the chat, but I don't have anything way to do that right now. But Benzinga here, AB is going to throw the link in the chat right now. You can click on the link, or you can even just probably just Google Benzinga Options Trading School with Chris Capre. And
yes,
Chris, do we have any promos to give the people?
Yes, I think they have a 70% off promo if you click on the link that I put in the StreamYard that you can post everybody. So yes, if you can share that. In fact, I'll just do it right now. Let me just share with everybody in the thing right now. So they have a 70% off. It also includes a year of Benzinga Options School. It also includes a year of Benzinga Pro, which is an amazing deal to go with it. So we have, after all these months and all this pining and all this, kind of mentioning it, we have said, hey, we're going to create a school together that is focused on options. So they created the Benzinga Trading School. We now have one for options. I'm going to be leading that, and I'm going to be teaching you how to identify market gamma. How do you identify for net short or long options? How do we trade these? How do we understand dealer and option positioning? What strategies to use? What charts and why? How to understand the Greeks on a more detailed level than you're going to find in most books. Really, how to become a sophisticated options trader so that you can generate a monthly income. That's the goal of this course. And so I'm teaching the same strategies I use. I'm teaching everything that I talk about little bits here and there in these classes, and I'm teaching now in this course all of it. And so it's an amazing opportunity for 1-year access. We're going over trade ideas every single day. It's super exciting. Imagine this, but way more detailed for like 3 hours a day, Monday through Thursday, and then office hours on Friday. It's a lot. So super exciting. I hope you guys get to join.
Link is in description and chat and was on screen just now. If you don't get enough Chris, you can have more.
Bam. Yeah, if you're like me, you might need some help with your options trades. Go check that out. Great deal going on right now, and you get some Benzinga Pro action for free. Chris Capre, I don't know if we'll see you again. You mentioned this will be your last Benzinga show for the year, so
yes.
We'll see you over on the Options School, but until next year, man, it was great having you on the show. Thank you for giving us all your insight.
Happy New Year, Chris.
Happy New Year. Happy holidays as well. Be safe. Be healthy, everybody. And I will see you guys in 22. Take care, everyone.
Yep. All right, guys. That was Chris Capre from Second Skies Trading. Go check out the link in the chat for the Benzinga Option School. Starting right now, we've got Moon or Bust. So Logan and Ryan will be joining us from in the office today. They're going to be talking to someone from Bacon Protocol. Pretty interesting
I don't even
interview.
know what that is, but I'm excited for
Yeah,
it. 'Cause I like bacon. I like protocols.
Bacon Protocol. There you go. All right. Without further ado, we're going to go ahead and wrap up here. This stream will automatically redirect you to Moon or Bust. So stick around.
Hit the like
Bacon
button.
Protocol coming up now. We'll see y'all tomorrow.